inside look at our hedge fund, and that's what we're going to be talking all about today. If you haven't checked out our YouTube channel as well, you'll see Matt and I out there talking a lot about what we're doing, and you're going to
Yep.
see a first look just today. So we're super
I
excited.
just started up a YouTube channel, by the way. So that's a big announcement. Pretty cool stuff. So, all right, we're gonna dive into it. This is all about you guys today. So I want you guys to use the chat, ask questions. We're gonna do a full live demo. Jason's gonna show you the behind the scenes, all the Python code that runs behind the scenes when we're actually doing trading. We're gonna show you data. We're gonna show you everything. All right. So hang in there. We got a big demo. Just so everyone's in the right spot, this is all about programming and using that to run a algorithmic trading style hedge fund for the solo trader, for people like you and me who are retail investors. If that sounds like you, give me a thumbs up. Give me a thumbs up. Use the emoji, hit the emojis. All right. Um, yeah, we got a lot of stuff to cover. Again, my name is Matt Dancho. I'm joined by Jason Shrimple. We're the co-founders of Quant Science. That's the Q over here. And we are also joined by our spirit animal, Python. Who, if you like Python, this is going to be a good training for you as well. All right, let's dive into it. So the year was 1987. This is a little story for you guys. The Wall Street movie. I love this movie. It hits the box office and it showed the public the dark side of the investment world. So back then, the main character in this movie was played by this guy, Michael Douglas. The main character was Gordon Gekko. So if you ever hear that name, that's what they mean. He's a ruthless corporate raider and arbitrageur, and his character embodies Wall Street at the time. Combination of business prowess, he did illegal insider trading, and he really had this like mentality of win at all costs greed. The popular opinion on Wall Street at the time was that traders were instinctual predators, just like this dude. There was also another character in there. His name was Bud Fox, and he was played by Charlie Sheen. And he's a hungry and ambitious junior broker. He idolizes the success, the power, all the stuff that Wall Street promises. And while mainstream culture begins to idolize this fast money and greed and instincts, a change is brewing. Guys that were mathematicians, scientists, and they were frustrated by this idea of greed and instincts and human intuition. They quietly set out to let code, not gut instincts, drive trading decisions. First was Jim Simons, launches the Medallion Fund. Anybody ever see this guy? Give me a thumbs up or give me a one in chat if you guys know who this dude is.
Oh, yeah.
Over the next 30 years, he crushes Wall Street. All the instinctual predators go to dust, they evaporate. Simon's flagship Medallion Fund grows at 60%, over 60% per year, 44% year after fees, and they charge some hefty fees. Next was Columbia University professor named David E. Shaw, and he launches his hedge fund with the initials D.E. Shaw. And by 94, D.E. Shaw manages $2 billion in assets with 26% annual returns that rival even the best traditional hedge fund. So the quants, they were winning. And more would follow into the lucrative field of hedge funds. But the problem, investors like me and you and Jason, we're all left out of this. Renaissance Technologies, their headliner Medallion Fund, has been closed to outside investors since 1993. Quant hedge funds like D.E. Shaw, they require over $1 million net worth, which puts them far beyond people like you and me. We can't invest in them and we're locked out. And do it yourself access to their professional tools, the things that they're using to drive their hedge fund, things like Bloomberg terminals and Reuters, they cost $30,000 or more a year, making it inaccessible to retail traders like us. The hedge funds have locked the doors on tools and algorithms so they can profit. That is until a young Hungarian quant named Thomas Peterffy. He reverse engineers this thing called the Quotron computer terminal. So that is the same Quotron machine that showed in Wall Street. So that this, remember this old computer here? That is the Quotron machine, and he reverse engineers it. And this laid the foundation for a spin-off broker dealer. It's a company, and he named it Interactive Brokers. Anybody ever hear of Interactive Brokers? Give me a thumbs up. Interactive Brokers is the pivotal moment because it opens up direct market access to everyone. Hedge funds, home offices, retail, they all start running on IB. A seismic shift is now happening. In the 80s, the old world, you need to know someone. Clicks or trades happened by a phone through somebody like Charlie Sheen's character Bud Fox, and commissions, they were sky high, like $25 to $50 a trade. Then in the new world, speed increases through these things called electronic communication networks that are making it faster and easier for people to get connected. So buyers and sellers are able to make trades much faster. The result, 1000x speed increase, and the costs plummet to pennies per trade. Then if we fast forward to the 2000s, so in 2002, Interactive Brokers opened up their API in C++. Next, in 2008, Python joins the party, our spirit animal, and now people like you and me who code in Python have access to it. And by the end of 2008, IB, Interactive Brokers, they literally crushed every single barrier that was preventing people like you and me from essentially running an inexpensive hedge fund ourselves. This gave rise to the decade of algorithmic trading with Python. So from 2010 to 2020, algorithmic trading with Python absolutely takes off. NumPy and Pandas, these are the two libraries in Python that set the foundations for everything. These libraries cover numerical analysis and data analysis. Then layered on top of that is statistical analysis. So we have libraries like SciPy, stats models for machine learning, scikit-learn. And then the quant backtesting frameworks arrive. So now we've got tools like Zipline, introduced in 2012. This is Quantopian's backtesting engine that they use in their actual hedge fund. They open sourced it for all of us. Then in 2016, they open sourced Pyfolio and Empirical that standardize additional things like attribution analysis and performance metrics. Then in 2019 came Vector BT. This is a super fast backtesting engine. Jason loves this thing. It's a marvel of software engineering. It's capable of running millions of simulations in seconds. And this was the beginning of empowering individuals like you and me with professional tools and algorithms. All right. Then in 2022, Jason and I started Quant Science. And our goal was to give you the algorithmic trading strategies that hedge funds actually use and execution with Python. Our results overnight, our students are having successes. They're leveraging our algorithms to make trading decisions in our community, and they were winning in our live trading competitions. So why did I share this story with you? Well, it's because algorithmic trading is the past, it's the present, and it's the future for growing your investments, because now any individual trader can grow their trading account if they have access to the same tools as hedge funds. That's trading algorithms that hedge funds actually use and professional grade tools that hedge funds use to run their hedge fund. Okay. So you have a choice now. You can be part of the 95% of traders on Reddit who don't use pro tools and just trade by gut instincts, or you can learn how to wield them. My portfolio just crossed 7 million. Actually, it's about ready to cross 9 million again. And some days I make over $100,000 on autopilot, and you can do that too. All it takes is the right algorithmic trading strategies and hedge fund grade tools. And we're going to show you how today, all right? So who's ready to step into the future of algorithmic trading with hedge fund grade professional tools? Drop a 1 in chat if you are excited to join us on this journey and see what we have in store for you today. All right, Jason, are we seeing any
Got a
ones?
couple. We're up to about 40. We got literally 301 people in the webinar, so I'm looking for 301s. We've got
Nice, nice. Well, I'll give you a sneak peek. We got tons of stuff we're going to be sharing with you. These are all things, and we got lots of code that we're going to be working through here in just a moment. All right. So this is going to be fun. All right. So welcome, guys, to how to become a pro algorithmic trader with Python. Again, I'm joined by none other than Jason Shrimple. He's going to be doing our live demo today. You got me here. I am a software developer and data scientist at Quant Science, and we are joined by our spirit animal Python. All right. So we're going to talk about how you can get hedge fund quality trading algorithms and professional tools today so you can compete in this unfair game that I talked about. In case you've never met before, my name is Matt. Nice to meet you. And I am not a traditional quant. I'm proof that you can be anybody and you can get into this field. You can start trading for yourself. This is my degree. It's from Penn State University, and I am a mechanical engineer. That's what I got my degree in. Haven't used mechanical engineer in probably 15 years. I got to be honest. I made a career pivot. I pivoted into this subject called data science, and I've never looked back. And through taking courses at home, I became really good at Python and machine learning. So good that Fortune 500 companies began hiring me, like S&P Global. They're huge in finance. You may have heard of them. Apple, they make the consumer electronic device that we all know and love, our iPhone, right? And many other small companies too have hired me as well. I co-founded Quant Science with Jason Shrimple. He's the best quant instructor I know. And together we've bridged the gap between machine learning and trading so we can grow our investments. I've traded a lot before I met Jason. I began in 2007 by listening to this guy. Anybody ever listen to this guy? You may have heard him. Buy, 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 sell, sell, sell. He's on CNBC, hosts a popular show called Mad Money. All right. Well, he recommended this stock, true story, back in 2008. And guess what? I had made a little bit of money off of him. So I was like, all right, I'm going to go all in. And I started buying. Bought there, I doubled down there, and then they went bankrupt. Okay. Washington Mutual becomes America's biggest bank failure. That was not fun. At the ripe old age of 24, I lost $30,000 of my own money. This is true. I went from 30,000 up to zero. It was a difficult moment for me because that was my entire life savings. I had only been working full time for about 2 years at that point. I'd been living on these things for 2 years to save up that cash. And but one of the things I'm most proud of is going from losing that amount of money, 30K in 2008, which is a lot of money back then. It's still a lot of money, to today having a growing portfolio and financial freedom. So these are a couple snapshots. This is how I've been able to grow my portfolio over the past year to 2 years. In January, I was up to about 4 million. This was in 2024, by the way. By March, I was up to 4.7 million, then to 5.2 million in May of 2024, and then by October of that year, up to 6 million, and then 6.7 in November of 2024. And what helped me do this? Well, I have invested in a lot of courses. Some were good, some were bad. I bought this course, 2021, didn't work. Taught me technical trading. Like I said, did not work. Anybody else do technical trading? Try to read charts, lines, patterns. It's like astrology for men. Yeah, didn't work. So please allow me to introduce what actually worked, or who actually worked, I should say. Jason. So I teamed up with Jason, and Jason, he is the quant mastermind. So he has over 20 years of quant experience at companies, including he was a derivatives trader at Trade Group LP. He was the trading risk manager at JP Morgan Chase. He was the global head of derivatives risk market development at BP Trading and head of engineering, data science, and analytics at Rio Tinto. But the best part about Jason, and this is what I really gravitated to, was that he doesn't just talk stocks, but he actually trades stocks and options. And this is his sweet setup. I'm always jealous when I see this computer screen because it's one screen. I've got two here, and it's just beautiful. I call it the cockpit. But most importantly, he gets results. Lots of green in his portfolio. He's shown this screenshot here. He's up over 53% in a year, and he doubles the S&P 500's performance. Some of his portfolio metrics here, and his cumulative 12-month return of over 50%. And that's why we teamed up, to really join forces and combine data science, machine learning, and most importantly, conquer the idea of algorithmic trading for the retail investor like you and me. So we can actually do this with the tools that we have available: Python, machine learning, data science, and stocks and data. So we want to help you win at an unfair game, and we're going to show you how to do that today. So we are excited to make 3 new announcements. We have first announcement. Jason and I were officially launching our own fully automated algorithmic hedge fund, and it's all powered by Python. So everything that you see today is truly running our algorithmic trading fund. Okay. We're going to show you that exact system and you can ask questions. We're going to do what no other hedge fund does. Nobody shows you Python code. Nobody shows you things running and strategies or how things work. We're going to do that. Okay. Yes, we are crazy. The second announcement, Jason and I are launching 3 new proprietary Python software packages that are powering our hedge fund. And you're going to see them demoed live shortly. And then the third announcement, Jason and I are launching a new system to teach you the exact algorithmic trading strategies and exact professional tools that are powering our hedge fund. And you're going to be invited along in that journey with us. If you guys want to continue with us, we've got the whole system ready to go for you. All right. And we got a full demo for how to start and scale your algorithmic trading from A to Z, whether you're a beginner, expert, in between. We're going to show you how to do that with our pro algorithmic trading software today. All right. Who's ready to see what we built? Drop a yes or a no in chat. Who wants to see this? All right, let's do it. We getting any yeses, Jason?
Yeah, yes, yeses. I like when you do ones better so I can count them. I think we
Oh,
got 60, 70 ones. We got a hell
all
yeah.
right.
We got a bunch of yeses. Love it.
Well, we got some yeses, so let's do it. So little backstory. Before we just give you the demo, I got to be honest. We got to give you the full story of bumps and bruises and why we created this monster. All right. So 18 months ago, true story. Jason and I we did start a side project. We wanted to build a hedge fund from scratch with Python, and we thought it was going to take us like a day. It took us way longer. So as we started building this thing, we realized that the ecosystem that we just shared with you today is fragmented. It's incomplete. Things just like we can't just automatically start up a hedge fund with what we've got open source. There were 3 big problems we ran into and the 3 needs that we discovered. So first need, financial data processing and storage. So obviously data is super important. That's basically the foundation of a hedge fund. So what we were running into was we'd have like tons of zip files. We'd have tons of random CSVs that weren't tracked. I wasn't using fundamental data. We didn't have that. We didn't have pipelines for data ingestion. We weren't cleaning the data. We didn't have professional grade data warehousing solutions available for finance. And moving data was very slow, painful. It was riddled with errors. So this is like what my hard drive ended up looking like. I would have tons of random CSVs and stuff. And honestly, my data analysis slowed way down. And what happened was that killed my profits. I would make lots of mistakes. Need number 2. There was no quant research or experimentation tracking system. And I come from a data science background, so I recognize that this was very important for me to track my experiments. Well, how we were doing it and how most traders like us are doing it, we'd have Jupyter files and they were untrackable. So I'd have a bunch of these things like strategy V1, IPython notebook, strategy V2, final, research backup. And there was no kind of pipeline for quant data science experimentation. So without that, it makes tracking the parameters you're using, the performance you're getting from a strategy and comparing strategies makes it impossible. Okay. So this is what my Jupyter notebooks look like. I have untitled 0, 1, 2, 3, 4. And then my best strategy was this one, use this one.ipython notebook. Let me ask you this. How tough do you think it is to make a profit when your best strategy is in a file saved as use this one? Okay. So the third problem that we ran into, execution. So management, monitoring, automation. We had no pipeline for setting up trading. We had no trade monitoring, which trades and KPIs. We were not tracking these. No audit trail. So we have to be able to track performance from placing trades to our back tests, and they need to be tracked, most importantly, to a specific parameter set. Also, if we want to have multiple strategies going on at the same time, how do we track all of that stuff? It makes it impossible. So as a result, our process suffered. Our zipline bundles would be outdated or broken. We'd read in the wrong data. We'd inadvertently use incorrect trading strategies. Our trading strategies contain data errors, and our strategies would overfit. So the biggest problem is we would lose money with all of these. So our trade executions would fail, and every one of these problems would cost us money. Now, imagine the ideal workflow. I'd start by automatically downloading the data into a pristine high performance data lake with the data all clean for me. I would then use a unified research lab to conduct experiments, and that would be connected to my data lake. And then I would be able to find strategies. And once I found a good strategy, I would use a robust execution engine and monitor those strategies to make sure that they were profitable, right? Well, I'm pleased to introduce to you guys today the Quant Science vision. One platform, three pillars that include a high performance financial data lake, a unified research lab, and a robust execution engine and monitoring, all three under one roof, so we can actually trade, make strategies, test them, experiment, find the best ones, and actually make money in the market, just like the quants, just like we'll call them the big hedge funds do, right? So it starts with our first software package that we're going to talk about today, QS Connect. All right, so this is the financial data backbone, and it includes automated data ingestion, it includes file caching, high performance database storage, all of the stuff that we need to be able to do for handling and managing our financial data. Next is QS Research. This is our unified research lab, and this is connects directly up to QS Connect, and it allows us to track experiments, create experiments, run back tests, all of that stuff, do parameter searches, sweeps. We'll talk about all that stuff today. And then finally is Omega. Omega is the execution engine. So this is Jason's baby. This is what he has created to make sure our trades actually get submitted and filled, and to actually track multiple different strategies in paper trading and in live trading. Okay, and this is how we win at this game. All right, so Jason's going to give you a live demo of our system in action now. Who's ready for that demo? Give me a thumbs up if you guys are ready. Are you guys ready? Who wants to see this thing?
These guys are ready.
All right.
These guys are ready.
Let's do it. Let's do it. I'm going to stop share, Jason. Why don't you show them the code while Jason's getting set up? Guys, I will be in the chat. Ask any question. I will be answering your questions live in the chat. The best part about this training is you can ask whatever question you want, and I will answer them, or Jason will answer them.
I got a question, Matt. Can you give me sharing power, please?
Oh, sorry. I need to give you sharing power. Sorry about that. I'm
No
already
problem.
screwing up the demo.
No problem.
It's June, right? We're in 2026 now. Happy New Year. We're a little rusty. We're getting off of the Christmas break. I've been drinking too much eggnog. You know how it goes. All right, what do we got here? What are we
Definitely.
seeing, Jason?
All right. Well, I always like to show off the IBKR trader workstation. So as Matt mentioned, I'm definitely active in the markets. This is my option screen. So Mark is asking why equities versus futures or options with more leverage. We trade what makes sense. At the moment, we're working on a factor strategy. So our kind of bread and butter is a predictive factor strategy, alpha factor strategy based on momentum. So we'll talk a little bit about that. But as you can see, I'm a big options guy myself. So I'm going to kind of shrink this screen up. I'm going to move to my portfolio view, shrink this screen up, and we'll come back to this later when I actually show you that we're executing trades live. So let me move that to the side. Okay. So Matt, as you may have noticed, I moved off of VS Code and now I'm back in my comfort zone, which is PyCharm. So if we've got any PyCharm fans in the house here, just drop a 1 in the chat. If you're a VS Code fan, just put a 5 in the chat, and then you can excuse yourself from the webinar. Just kidding.
No, don't do that. I'm a VS Code fan. I'm not leaving.
Matt, VS Code fan. I tried.
I love VS Code.
It's whatever you're used to. All right. So first, what I'm going to do is I'm just going to kick off the strategy. Okay. So this is the exact workflow, the exact code that we use to run our algorithmic trading strategy. So I'm just going to show you how easy it is. And then I'm going to show you the orchestration server that gets set up automatically when you run this. So I'm going to type Python. You can all see me typing, right? Towards the bottom of the screen in the terminal. Just put a 1 in the chat. You guys can see me typing. Okay, you got me? Okay.
Yep.
Python QS momentum. And when I hit enter, the entire end-to-end pipeline will run. Okay, this is data acquisition, this is modeling, this is backtesting, this is trade execution and rebalancing. I'm going to hit enter. Okay, it's going to take a second. Oh, failed. Okay, let me come back to that in just a second. I'll fix that. But let me show you the code in the meantime, okay? So what you're looking at here is we've got the actual tasks that we use to run this code, this orchestration. Okay, so the first function here is we've got the download prices FMP, and we're using. Somebody asked in the chat about the data source, and the data source that we're so we will show you later one of the libraries that we have called QS Connect, and this allows you to download data for free from things like Yahoo Finance. So if you're looking carefully, and if you're not a Python person, the best part is that you don't need to know any of this stuff, okay? The code is already written, and all of the hard stuff, all the modeling, all the complexity is actually hidden from you, okay? So this stuff all is in the background. But I'm just going to go through and show you. So Alex asks, this is all QS Connect, which I'll show you in a minute. So first thing we do is kind of create our client. We then get the list of assets that we want to trade. In this example, we're looking at equities, stocks, okay? We have some filtering, and this allows us to build the universe. We talk a lot about this later. Matt will talk a lot about this later. We have a couple benchmark ETFs, and then we call the request to get the data. And what this is doing in the background is actually downloading millions of rows of data. And you can actually see that here on the right. You're seeing these data tables in DuckDB, which is a high performance data lake. Okay, so this is setting up your high performance quantamental data lake. The second step here, okay, so this is a 30-line function. And again, if you've never seen Python before, don't worry. That doesn't matter because you don't need to actually look at the code. The second task here is to download fundamental data. So the fundamental data is things like balance sheet data, income statement data, ratios, cash flows. Just put a 1 in the chat if you guys are kind of finance people. If you know like corporate finance, balance sheets, income statements, um, things like that. Okay. Okay, cool. Um, so that's what this is all about. Okay, so I just kicked off the fundamental data through this task, right? So once this thing runs, you will go out and get income statement, balance sheet, cash flow, and ratio data. Now, I'm going to ask another question. How many of you guys in the audience today, guys and gals, put a 1 in the chat if you consider yourself kind of an active trader or a trader? So you're trading a couple times a month, you're investing, you're putting on trades in the market, any asset. Okay, we got lots and lots and lots of ones. Okay, we got a 6. So I don't know if that's 6x or what, but okay. Now, of those of you that consider yourself investors or traders, put a 5 in the chat if you primarily rely on price data. Primarily rely on price data. You're looking at charts, you're downloading historical prices. Okay, lots of 5s. Price and volume. Okay, so this is like open, high, low, close bar data that's generated from, your prices. Now, here's the secret, guys. You are all competing against each other. You all have the same data. You all have the same tools. You all looking at the same thing. And there's only a finite amount of edge in the market when we're looking at only price data. And it's not only the 300 or so people that are in the audience today, but it's the millions of retail investors across the world that are looking at the same stocks, same markets, same prices, same tools, okay? EWA, RSI, these are all just filters on the exact same nearly random price data. What you need to actually capture sustainable edge is asymmetric information. That is why fundamental data is so important. Okay, so you have not only price data, but you have fundamentals as well. And combining those two together gives you an edge on all the other people that don't have that information. Okay, so this is why Matt and I have spent a ton of time building the infrastructure to construct this high performance data lake, which includes millions of rows of price data. You've got balance sheet, you've got cash flow, you've got income statement, ratio, et cetera. So if I just kind of double click on what this looks like as an example, This is the balance sheet data. So we've got things like cash and cash equivalents, short-term investments. This is the stuff that comes out of the financial reporting of companies. Okay. All very, very important to get that kind of asymmetric information. Now, the challenge for like mere mortals like us is organizing the data. I'm getting lots of questions in the chat about how to get this data, how to organize it. These are all the problems that Matt was talking about, right? So downloading CSV files and all these CSV files already. So what we built, and I will show you this shortly, is this high performance data lake with our library called QS Connect. And the last step of this process is build data lake. And it's literally like 3 or 4 lines of code. Connect to the client, get the files, load files to database, delete the files. So what we're doing under the hood is actually going out, downloading CSV files from the API, immediately converting those to Parquet. So we're writing Parquet files. How many of you guys have heard of Parquet? Parquet. All of my data people will have heard of Parquet, right? You all know columnar, highly compressed, highly efficient data store, right? Now, of all of you guys who are Python people, how many of you have heard of Polars? Polars. Put a 1 in the chat if you guys have heard of Polars, okay? Polars, hyper fast, right? Build a query plan. The query plan executes in a lazy fashion, allows you to execute huge data volumes exceptionally quickly. It sits on top of Rust. Okay. Matt has been a huge proponent of Polars for like a year. I finally started to dive into it about, I don't know, 6 or 9 months ago, and I'm totally sold. It's a great tool for this work. And then finally, how many of you have heard of DuckDB? DuckDB. DuckDB, anybody? Okay. In process, relational database engine. Again, hyper fast. We put these 3 tools together to build the data lake. And the best part is you don't need to know about any of it. It all sits under QS Connect and it builds exactly what you're looking at here, which is the data lake. So I'm actually connected. So you can see the little duck logo there. I'm actually connected to the Quant Science DuckDB database. Okay. Okay, so that first step. And in 88 lines of code, we will have downloaded a couple million rows of historical price data, a couple million rows of historical balance sheet data, or excuse me, fundamental data, and stitched it all together in an aligned way in a high performance DuckDB database. Okay. All right, that is just the first step. And that is what happens with just the 1 line of code. So now we have our DuckDB database. The second step is to so-called bundle that data into a format that our backtesting engine can read. Okay, so we use 2 backtesting engines. We use VectorBT, which is a vector-based backtesting engine. How many of you guys have heard or tried VectorBT? Just put a 5 in the chat. VectorBT. Okay, yeah. VectorBT is awesome, hyper fast. It uses Numba, so it compiles just in time down to C. And again, if you don't know what any of that means, don't worry. VectorBT is very fast. We also use a tool called Zipline Reloaded for our factor portfolios. So for our signal-based strategies, we are looking at things like VectorBT for spread trading, statistical arbitrage, single or multi-asset strategies. Yes, Mark, VectorBT does do walk-forward analysis. That's why I love VectorBT. It's cool that you pointed that out. Matt will talk about how we do this in ML, which is called cross-fold validation. If you're a machine learning person, it's the same concept. Zipline Reloaded is great for factor-based portfolios. They've got a lot of the really, really good tooling there to help you build and manage predictive factor, alpha factor portfolios. Okay. So that's what this is doing. We connect to the database and ingest the data into a Zipline bundle. Now this, I've been using this kind of tooling for like 13 years, right? And I've had the same script for 13 years. And it would run, it would take an hour to do its thing. Matt's like, that's ridiculous. And he rebuilt the whole thing in Polars and it takes like, I don't know, a minute. So we go from 60 minutes to 1 minute with this process here. And we're pulling this data directly out of the high performance DuckDB data lake. Okay. Very powerful. We register the bundle and we are done. So this is another automated process. So we are in step 4 already. Price data, fundamental data, download or build the data lake, and then we bundle the data. Now, the way that we run our strategy is we use the backtesting engine as our analytical framework. And that's what you're seeing here. So in one line of code, we run all of that data through the backtesting engine. All of the logic, all of the strategy, rationale, and tooling is built into the engine. We run that. The backtesting engine spits out the trades, and then we use that output to actually execute live in the market. And the reason this is a good idea is because you want what's called calibration. You want to make sure that your backtest results are consistent with your actual results. If they're not, that's telling you that there's something wrong with your backtest, or your backtest is not reflecting reality. And they will never be perfect, but they should be close. Like if your actual equity curve is going up, then your backtest should be going up and vice versa. So that's what this step does, is it actually runs our strategy through the backtesting engine. And like I mentioned, we're running a momentum strategy. Matt's going to show you all the experiments that he's done. Pretty incredible. I mean, he's been banging on this for like 6 months, running, I don't know, hundreds of experiments.
Lots of experiments, guys. Lots of
Lots of
experiments.
experiments, and we have dialed it in. We've got the parameter set, we've got the strategy. We call it the QS momentum factor. Um, it's actually not that fancy. It's very easy to understand. It's very easy to trade. It's the infrastructure that's the challenge. And that's what Matt and I spent the last 2 years building to make it super easy to run this. Because the truth is, we don't want to spend time. I mean, we love to code, but we don't want to spend time coding. We want to spend time building strategies. Okay. All right. So that was step 5. The backtest has been run. And now we actually, our actual logic in trading. Okay. So we have a tool called Omega, and I like to call Omega our Algorithmic Trading SDK. It's a Python library that interacts directly with your brokerage account. It allows you full feature parity with your brokerage account. It allows you to trade directly with your account, okay, through Python. And I'm going to show you how that actually works live in just a minute here. I have a function. This is a task. This is automated, called execute trades. We connect to our brokerage account. We get all of the positions that we currently have in our trading account. We figure out what positions that we should have based on our backtest. Again, if you're a Python person, this is very straightforward code. If you're not a Python person, you don't have to worry because you never have to look at it. But essentially, we loop through all of the assets that we should liquidate. We create a contract object, and then we order target percent. So the great thing about this tool, Omega, is that you can just tell it what you want as a target, and it will figure out how many shares to buy or sell to set your brokerage account equal to that number of shares or contracts. So if I'm long 20 shares and I set the target percent to 0, it will sell 20 shares. If I'm short 13 shares and if I set target percent to 0, it will buy 13 shares. It's got that logic built in. To do this normally, any one of you that have been trading or are traders or that do this step manually, you definitely have a spreadsheet open and you're definitely plugging in prices and you're definitely plugging in share quantities and you're definitely getting as an output a calculated field, the number of shares to buy or sell, and then you're definitely managing or entering those trades manually. This is all done for you, all goes away, okay? All that complexity goes away. Then once we've liquidated the assets that we no longer want, we buy the assets that we do want. So we have a function here called Omega Trades from Zipline, and it basically takes the output from Zipline, which is our backtesting engine, and it creates trades suitable for Omega. We then loop through those trades and we submit order target quantity. So in addition to order target percent, we can send it a target number of shares. So say it's the target number of shares is 25. Let's say we have 19 shares in our account or contracts or whatever, it will buy an additional 6. Okay, so it's got that logic built in. And then we disconnect because we're done. All right. So very, very easy. This is the full end-to-end automated system. And then finally, the script or library that actually links all this together and orchestrates it is very, very straightforward. So we submit the two functions or tasks that download prices and download fundamentals. We wait for it to finish. We then submit the task to build the data lake, dependent on the prices being downloaded and the fundamental data being downloaded. We then bundle up that data subject to the data lake being complete. We then run the backtest subject to the bundle being complete. And then we execute the trades subject to the performance output from the backtest. Okay. You guys following along, just put a 5 in the chat if this is making sense to you. More conceptually, even if you're not a Python person, again, the code doesn't matter. Just conceptually, what you're seeing is how we actually run our algorithmic trading strategies, okay, in our fund. This is exactly how we're doing it. And it's actually very easy. So if you're a Python person, this should all look very, very straightforward and familiar to you. If you're not a Python person, then you don't need to worry because it's really just as simple as running a single line of code. Okay, so there's some additional tooling that we've got in place here. And this is one called Prefect. So Prefect is the tool that we use to orchestrate everything. So what you're seeing here is the full end-to-end orchestration of all of those steps that I just showed you. Okay, so if I can make this easier to see. There we go. So the first thing we do, as I've talked about, is we download the prices. Okay. The second thing we do is download the fundamentals, and this corresponds exactly to the code that I showed you. So for example, download prices FMP is exactly this function decorated with this task decorator. So this thing here tells the orchestration tool that this is a step in the process, okay? And that's what we're seeing here. So they each corresponds to exactly what I just showed you. So download prices, and you can see what this arrow is saying is that building the data lake is dependent on both of the prices and the fundamental data being available, okay? And this is all orchestrated. To do this before, you would have to basically wait in a certain amount of time. And if the API was delayed or the thing took longer than you expected, then the whole process would fail and you'd have to start over, you'd have to watch it. This allows you to ignore all that and it triggers it based on dependency graph. Okay, that's what it's called. So once the data lake is built, we build a bundle, we build the backtest, and then we finally execute trades. And this is what the end-to-end process looks like in the UI that we use to actually monitor our runs. So again, it's very graphical, very easy to see. No confusion over what's happening here. I also wanted to show you ML Flow. So how many of you guys have heard of ML Flow? Put a 9 in the chat if you guys have heard of ML Flow. For all my data science and machine learning people, ML Flow is a tool that has been open sourced and created from a company called Databricks. Databricks is a huge private company that has an analytical database. And this is a machine learning experimental platform. Well, Matt, in all his brilliance, is like, well, we're running machine learning trading strategies. Why don't we use MLflow? And we are. So all of the
That's
back,
what I use for data science too. Yeah, and to my knowledge, I don't know anybody who's actually like started using it for quantitative or algorithmic trading, but works really good.
it's awesome. Yeah, it's so cool. And let me tell you why this is important. So you've got, and this is the mistake most beginners make, right? Is first of all, nobody ever tracks performance against the parameter set. So at a minimum, you guys will, not you guys, because we're all highly evolved in this session for sure. But other people that are just getting started with this stuff, they will run like brute force optimizations or they'll run through a parameter set and test which parameter set maximizes their P&L. And then that's the parameter set that they will use. And then if they're trading, they will use that parameter set and they might change the parameter set. The problem is, how do you attribute changes in your parameters to changes in performance? How do you know that if you change the input into your model and performance goes up or down, how do you know that that's attributable to the change in inputs and not just the change in market? That's what MLflow does. So it allows you to run multiple experiments And we use it for that purpose, and we use it to track all of our performance in the same place. And I'll show you what this looks like. So I think this is actually one that I did, I think, yeah, 8 days ago. So this is a strategy run, and Matt's going to show you after I'm finished here. He's going to show you a lot more robust. So Matt's the research guy, I'm the production guy. So Matt's ML flow looks a lot more impressive. The cool thing about ML flow is that you can literally put different parameters on the x-axis and see the difference in performance on the y-axis, and he'll show you. So when you click into this thing, you see all of the input parameters that you use for that particular experiment. So these are all the inputs that we use into the strategy, okay? So our processor is polars. We're using after open execution time. We're using the closing price as our price column. The start date was 2024, basically the beginning of 2024. So I'm going to show you the performance over 2 years. Um, our factor column, this is our factor column. This is our secret sauce. Close, QS momentum, 21-day mean reversion penalty, 252-day look back for momentum, and 126-day standardization factor. You don't need to know any of that. Point is, though, this is kind of again, our secret sauce. And Matt's going to show you how you can actually see how this works after my demo here and get the code. Etc. So these are all of the input parameters that we use to configure our strategy on every run. And what this will do for you is you can test to see. So if I actually go back here and let's just pick this one, and I just run this the same time over and over. So like there's no comparison because it's the same exact parameters, but just as an example, you can select the different input parameters and they will show up on the so-called x-axis. And then you can check your y-axis as your change in performance. So for example, it's probably a bad example, stop loss. I think we did that volatility one, right? Volatility. So we had a volatility filter and, oh, it's true or false too. Volatility, max,
Yeah,
there we go.
that max volatility is a parameter.
There we go. So again, the two runs that I selected to compare are identical. So you're not seeing anything. Matt will show you what this looks like when you actually have something more interesting. But on the the y-axis here, you're seeing differences in max volatility input parameter. And on the y-axis, you're seeing a change in Sharpe ratio. So what you'd be able to see is a scatter plot that shows you how to how your changes in input parameters actually alters the performance of your strategy. And that's a pretty basic example. Like when we start to talk about XG Boost, so we have a library called QS Research that allows you to run XG Boost models. They're a boosted tree model. You can actually change the input parameters in your machine learning model as well. So again, like this is all tilting towards the advanced stuff that we're doing. As a user of this platform, you don't necessarily need to do this. I'm showing you what we do under the hood to run our stuff. And yes, Vishal, everything we run is open source. So even this is called Prefect. So we've wrapped Prefect in a library to make it much more specific to our algorithmic trading strategies. But this is all open source stuff. This is running on my local computer. Okay, so when you spin this up, it runs all locally. You're not going to the cloud, you're not signing up for anything. Like this is all just Python that you spin up and run locally on your computer, which is the beauty of this whole thing. So let me just talk about the performance here. And what we're looking at here, so I already showed you the input parameters, right? These are all the output parameters. So we've got 72 performance metrics that we track on every experiment, right? So just as an example, this is the Sharpe ratio of our strategy. So portfolio daily Sharpe 2.55. How many of you guys know what a Sharpe ratio is? Put a 5 in the chat if you know what a Sharpe ratio is. Okay. So tell me, is a 2.55 Sharpe ratio impressive? Put a 1 in the chat if you think a 2.55 Sharpe ratio is impressive. Yeah, exactly. I'm glad you agree. Now, that said, The benchmark, which in our case is the SPY, is still a very impressive 1.96, but we consistently outperform the benchmark. Okay, and that's what we're seeing here. The monthly is even better, 2.6. So the Sharpe ratio on this thing has just been crushing, and this is over a 2-year period. If we see the CAGR, the portfolio CAGR, 98%. That's a 98% annualized return over 2 years. The benchmark was a 26% annualized return. So we 4x'd the benchmark on the strategy. All right, so we want to see the Sortino ratio. There we go. So for TED, the daily Sortino, 4.5. Okay, so the Sortino just takes downside deviation as the denominator, if any of that makes sense to you. Very, very respectable 4.5 Sortino. The benchmark daily is 3.2, which is also really quite good. You could have crushed it just in the S&P, only our strategy 4x'd and the 4x the benchmark. So the point of me showing you this is not necessarily to impress you with the stats, although that's always a nice thing, but it's just to show you how easy it is to track every single experiment. And ML Flow, all of this orchestration and instrumentation is built in. You're not turning anything on, you're not doing anything, you're literally just running the code, and all of this stuff is instrumented and orchestrated within the end-to-end workflow. So all this stuff is being tracked completely automatically for you. Okay. All right. The other great thing about what we've set up here is we track artifacts. And Matt's going to show you, he's been vastly enhancing what we've got here, a lot more artifacts. But all of this stuff is also available to you. So you can see the path is my local computer, users jason.qsresearch. So this is living on my local computer. This is just a CSV file. So you have it as a local file as well. The performance pickle, so a pickle file is just a serialized file. There's nothing to see because it's serialized. And then finally, we actually have our tear sheets. So this is the performance analysis of this run. And you can see the equity curve here. You can see match to benchmark. I don't know what that means, log scale. This is all very, very similar information. Point here, though, is that it's all in the same place. And you can see how well it all fits together. So the volatility, very, very stable. And I don't actually remember seeing this before, but the volatility is sitting between 25 and 30%. This is the key. Most beginners, they just look at an app like one number volatility and say, oh, my volatility is 27%. Well, how does that actually evolve, right? Rolling Sharpe ratio, very similar. So at its worst, the rolling 6-month Sharpe ratio is sitting around, 0.75, 1%, et cetera. Drawdown, graphic depictions of drawdown. So our drawdown was only 12%. And this includes the April 2025. This is where, the whole world kind of melted down for a while with the tariffs. And you're seeing the portfolio held up really quite well. And then there's just more and more charts. The other thing that's really great here is that we have our actual factor analysis. So how many of you guys have heard of alpha factors before? Just drop a one in the chat. And forgive me for those of you that are typing questions and then they just get lost. But all right, so alpha factors are basically how hedge funds trade. An alpha factor is what you think of as a predictive factor. The truth here, guys, is when using machine learning in trading, you're not just putting prices into a machine learning algorithm and expecting some sort of signal. That's not how this works. Okay. What you're trying to do, and this is what we do in the fund, is predict forward returns. And that sounds similar, but it's actually very different in a lot of reasons. And essentially what you're looking at here is the factor performance. And all you care about is the final bar, that last bar to the far right, being very tall. And it is. So that's about a 25 basis point return per day on our alpha factor. Okay. That's very good. We spent a lot of time doing factor analysis, and we have found statistically significant alpha in our strategy, which is really great. Not only that, but we have it all in the same place. Okay, let me show you some of the libraries, and then I will actually give you a live trading demo. So I talked a lot about Omega. Omega is our execution engine. We call it the hedge fund in a box. And what it allows you to do is use Python to completely manage all of your algorithmic trading. Um, so there's a ton of code here. And actually, I just put in maybe I'll just show you this, guys. This is an algorithmic trading strategy called FX arbitrage, triangular arbitrage in the foreign exchange markets. And very short, this is all it takes. This is all the code. But essentially, if you have euro to GBP and GBP to US dollar, euro to GBP, be able to exchange that exchange rate for GBP to US dollar at the same rate in a triangle, right? And occasionally that relationship breaks and there's an arbitrage opportunity there. So with this example, we're using the event-driven nature of Omega. So Omega is event-driven. On every tick, you can see here I'm installing the events. On every tick, we run this arbitrage strategy, which basically looks for scenarios where that triangular relationship has broken. And this just sits there and runs. Okay, and this is an example that sits inside of the repo. So I've done a bunch of these examples, and you can just let it sit there all day and capture pips. Now, they are fleeting opportunities, and frankly, US dollar, euro, GBP, there's not a lot of arbitrage opportunity there. But if you can find some illiquid pairs, there's always something to see. Okay. So people always ask me what else can you do with Omega? This is the documentation page. This is all copy and paste snippets of code that do different things. So creating the actual trading app is just a few lines of code, and I'm going to show you this in just a few minutes. Um, you can get equity information, account information. These are all copy and paste examples, all the positions in your account, P&L in your account, and I'm going fast because we have a lot to show you and I got more to cover. Orders, get your fills, get your executions. People always ask me about market data. We have real-time streaming tick data. We also have L2 data. So if you subscribe to depth of book data, you can get it streamed through Python. Historical tick data as well. So if you want historical ticks, you can get historical ticks. We have historical bar data. This is what folks are usually used to, up to 1 second resolution. Okay. And it's as simple as this: get historical data and you get it in a pandas data frame. Very, very simple to use. You can get historical contract data for many. So this is futures, options, whatever you want. Yes, it works for commodity futures. I'll talk about that in just a second, Victor. So contracts, this is resolving and looking up contracts. We have a market scanner here, executing orders. So a lot of you said that you are traders. Here is the types of orders that we support: market orders, limit orders, stop limits, market on close, market if touched, brackets. We have conditional based orders, so only execute if a certain amount of time has passed, or price conditions or margin conditions. We can integrate with custom or broker specific algorithmic orders, trailing stops, hedges, scales, combos. So combos are like complex options positions, lots of different orders. And here are the tradable contracts. So Vitor asked about commodity futures. Yes, it does. Stocks, options, futures, continuous futures. This is for continuous future market data, historical future data, cash, forex, indices, CFDs, spot commodities, bonds, futures options, mutual funds, warrants, complex options positions, and crypto. Okay. Every instrument you can possibly imagine is tradable through Omega. Here's more examples. And then it's event driven. So you can hook into events. So every tick you do something on connect, et cetera, et cetera, et cetera. Okay. The next library I want to show you is called QS Connect. So QS Connect allows you, this is the tool that we use to build the high performance data lake. It's massively full featured. I mean, we've been working on this, I think, for literally 2 years now, and Matt's been in there as of last week. So somebody just asked about maintaining the code, Jerome. We maintain the code. We have, 650 or so students that are actively submitting PRs and issues and things like that. But this is our bread and butter. This is what we're using. We don't want to introduce risk to our system, so we're constantly updating the code. Um, and you can, by default, it ships with access to Yahoo Finance. It ships with access to FMP. But you can actually integrate any number of different data providers as you want. So that was a big feature update just a couple months ago where we use this provider model. So if you want Polygon, here's an example, etc. And then to get the data, it's just a couple lines of code. So this is what I showed you in that FMP acquisition, where it's just get historical prices, get the income statement data, get the balance sheet data, get the cash flows data, get the ratios, metrics, etc. Um, I mean, we're talking about thousands and thousands of lines of code here. Um, so I'm not really going to get into all the code other than to just impress you with, let's see, adapter. I want to impress you here for a minute. Manager. I get lost sometimes. Did I just go here?
What are you trying to show them?
I want to show them the client for, I don't know, GitHub is stuck. Show them the client for FMP. I'll come back. I don't know, GitHub looks stuck for a second. It's loading. The next library that I wanted to show you is, happy, good question. The next is QS Research. So QS Research is basically a wrapper around Zipline Reloaded. And what it allows you to do is run machine learning based strategies through configuration. So instead of writing Python code to actually write a backtest, it allows you to do things like parameter sweeps, which Zipline Reloaded does not support. Matt rewrote a backtesting engine with polars, so it's very, very fast. Um, and it allows you to run machine learning based models. This is the research environment that you can use to test different alpha factors. So let's see if GitHub is going. Okay, there we go. I don't know, I'm just picking something at random here. But these are all examples on how to use this thing. It looks like a lot of code because this is a very robust example, but it actually can get very, very easy. Here's an example. This is what I wanted to show you, predictor columns. So, when you're running machine learning models, you have to have predictor columns. In this example, these are what we are trying to predict. And this is the configuration. So really, it looks like there's a lot here, but most of it you don't have to touch. What you touch is basically this: start and end date, capital, and that's kind of it. The rest of it you can leave it. And we're continuously pumping out these examples over and over again. So this is what we're using to actually test through machine learning strategies. Okay, finally, QS Automate. So this is what I ran through with you earlier. This is a wrapper on top of Prefect. Prefect is a orchestration tool. Again, to run it, it's literally just run this, and you're good to go. If for those of you that are more advanced, QS Automate supports dev containers. So if you wanted to run this in a Docker container, you can do that. And we've got a relationship with a VPS provider. So I saw somebody in the chat mention VPS. VPS stands for Virtual Private Server. So what this allows you to do is run your entire stack on a remote computer that's co-located to the exchange. So there's computers in New York and computers in Chicago, 50 millisecond latency to the exchange. This is an awesome way to avoid having to use your local home computer for this stuff. You just do it all on the remote machine. We've got a great relationship with them. In fact, when you create a virtual machine, it spins up the Quant Science image, and that comes with all sorts of software installed, so it makes it even easier. The only thing you need to do is these, 7 steps. Very, very simple to get this whole thing set up and running. All right, let me switch gears here for one last second before I want to hand it over back to Matt. I'm going to move this off the screen so I can get to an example, and I'm going to show you how this stuff executes here live. So let me find my example. Matt, in the meantime, are there any questions that I
Oh,
should answer?
I've been answering a ton.
Okay,
There's
perfect.
been so many, but I'm think I'm keeping up with it pretty good. So don't
Great.
worry about that. Just show them the execution or whatever you're wanting to show them.
Yes, I will do that. Okay, so I'm going to get a little bit squished here. Actually, that's pretty good. All right, so I'm gonna move my window open here again. And what I'll do is I'm going to show you how I can execute some orders here. So I'm going to go into my Python interpreter. Okay, you can all see the screen, right? Just put a one in the chat. You guys can see my terminal. Ones. Okay, all right, cool. So we're going to start with importing Omega. Oh, okay, I know why that happened. Sorry, I usually do this a different way. Let me just go to my Python interpreter. I promise I know what I'm doing.
Hmm.
So the reason that happened is because since Omega is event driven and IPython is also event driven, the event loops conflict and there was some extra code I had to add. But this is the way you'd normally do it. I try to get fancy and that's what I get. No, you don't need to follow me, Dimitri. I'm just doing this for demonstration. So I've got Omega imported. From Omega import, let's say, let's do a stock order market order. Okay, I'm going to start my Omega app. Omega. Oops, let's do it this way. Omega. And what you'll see here is, oops, sorry, missed. Let me move this over. And what you're going to end up seeing here is some orders that, cut off here, some orders that show up on the screen. Okay, so first I'm going to show you when I connect. I've got my data window here, right? And all this green is telling you that I'm connected live to the exchanges, right? The data farms, the execution engines, etc. And you see down here in the middle, it says API connections. Grady, this is a paper account. Okay, so we don't do live demos with live strategies. We trade we trade in the mornings. So we're actually after our trading window, which is why I'm not doing this live. Plus, I'm just going to put in a random trade to show you guys this, not actually in our account. So when I hit enter in Python, you're going to see another green box light up. Okay, and that tells you that you are now connected. So app is your trading object. So what app gives you, I know this looks like a mess, but each one of these things is a different method or function that you have to interact with your account. Okay. All right, so let's actually do some things here. So we're going to create a stock contract for Palantir. We're going to route it. We're going to let interactive brokers route it to the best exchange. Okay, so now I've got this Palantir object thing. This is a Python object that represents a stock object, a stock contract. And I'm going to create an order. So I'll say market order equals market order. Action equals no. So I've got a position of 23 shares. Let's do a buy instead. We'll flatten out our position. Buy total quantity equals 23. And I'm actually going to add an order reference as well, and I'll show you why that matters in a second. Order reference equals, what's the date? 8 Jan demo. Okay, so now I have a market order. And remember, we can do limits, we can do limit orders, stop losses, etc. I'm just showing you a very basic order. And to execute app.order, Palantir, market, order. Now, when I execute this and hit enter on my trader screen, my trading screen here, you're going to see an actual order show up and it will execute immediately because Palantir is very liquid stock. Okay, so enter, boom. Okay, so we just submitted a buy market and it was executed instantaneously. And you could see now my quantity of shares of Palantir is 0. Okay, that is just the most basic example I can show you. But the point here, guys, is that you are now trading with Python. And all of the functionality that you need to do algorithmic trading is accessible to you now in Python. No more Excel, no more manual manipulation, no more calculators. Everything is in Python. Final example, I'll show you. Oh, go
Oh,
ahead,
I was
Matt.
gonna say, can you show them too how that gets logged in the database too?
I
That's pretty
will.
sweet.
I got
Okay. Oh,
one more
sorry.
thing to show. Yeah. And then I will do that because people like data, right? People always want to talk about the data. So I'll show you what it looks like to get historical data. So I'll say data app.get historical data. Contract is Palantir contract. End date is right now. So this is live. Duration, let's get 1 year of data. Bar size is 1 day. And what to show. This is also very unique is that we can actually show trades. We don't have to show, most of the time you're just getting like the last price, right? So Omega will offer you bid, ask, midpoint, trades, etc., quotes. So I hit go, oops, and date time, sorry, and date time. Data is now a pandas data frame, right? This beautiful, took a split second. Yeah, Palantir is the stock contract, right? So we created this stock contract. This has also been resolved. So you'll notice that it's got the contract ID automatically resolved. So this is a fully, it's called be resolving the contract. That means this has all the information of that contract. And I know Matt wants me to wrap up, but give me a second to show you this. Where I in directory Palantir print I. So all of this information you now have about that contract. Now, if this was a futures contract, you'd have details about the futures contract. So like primary exchange. So PLTR, primary exchange is the NASDAQ. Okay. So you got all of this kind of detail. Yes, Antonio, we do have level 2 data, right? So if you subscribe to L2 data, that's like depth of book data. You can stream depth of book data. All right, guys. Last thing I want to share with you then is the database where we log all of the trading activity. So let me add a quick data source here, and it's all stored like locally. So I know we always get these kind of questions. You're stealing my data, you're looking at my trades. No, we're not. This is all just sitting on your local computer. Normally you'd have this already loaded up, but I don't, so I'm going to do it now. Here's the Omega database. Oops, what did I do? JSON. Omega. I'm good at math. I'm bad at spelling, if you can believe that. Where's Omega? There it is. Omega database, open, test the connection, connected. Okay. So everything that you do, yes, techie, bid ask, delta, volume, implied vol, all of that, if it's options. So if you're looking for options data, um, it's there. So you can get historical options data from Interactive Brokers, but as Matt says, it's kind of expensive. All right. So what do you get when you trade things? Well, everything is logged in a local database, okay, a local SQLite database. So for example, all the contract details um, are logged, all the contracts that you're interacting with are logged. So these are all the contracts that I've traded. So for example, if you're trading in options or future, you've got the trade date or contract month, strike, right, etc. All the symbols, the exchanges. Here's a futures contract that I last trade, and then the multiplier. But what Matt is talking about is the executions. So these are all the executions that we've made over time, right? And all of this information is tracked locally in a computer, and you can see the very last trade I made, permanent ID, order ID, client ID. These are all the IDs that we get. The commission, the currency, the actual time was the 8th. This is all UTC, so January 8th at 4:11. That was 5 minutes ago. My account, where it was executed, the side, the share quantity, the price, and then the order reference. So the order reference is great if you're running multiple strategies at the same time. This is how you can track your different strategies in the same account. Okay. All right. That's what I had to show. So Matt's got lots more to show you. I'm actually going to jump in a minute here because I've got some family stuff to deal with, but I wanted to get on here and show you all this today. So I hope this was insightful for you. If there's any takeaways, the key is that I showed you a lot, but to run the whole thing, it's just one line of code. Python qsmomentum.py, that kicks everything off. All this stuff is logged automatically for you. It's all there. You don't have to actually do anything else than that. And this is what we are actually using in our algorithmic trading hedge fund. So I'm going to stop sharing and Matt, throw it back to you.
All right. Well, let's give Jason, before he hops off, let's give Jason a big round of applause. I thought that was pretty good. And we got a lot more to share with you. I'm actually going to show you some of the stuff that I work on at Quant Science and what we're doing trading on our nightly back test inside of our hedge fund, and some of the automation stuff and some of the more kind of nuanced things. But thanks so much, Jason. This
Yeah,
is great. And you got to see a live hedge fund running and all the Python code, all the databases, all of the stuff that we've been
cheers, guys.
pretty awesome.
Have fun.
All right. All right. Thanks, Jason. I'll see you later.
Bye bye.
All right, guys. So uh, this is great. We are now kind of ready to expand on what we've talked about here. So I'm going to show you, like I said, a lot more. We've got the machine learning coming. We've got some of the what we do for our experimentation inside of our hedge fund, even the automations and the things that we're running to make sure things are working properly. So let's move on with the show. So now remember, guys, the only thing that's holding you guys back from reaching your full algorithmic trading potential, there's two things. First, if you want to compete with the hedge funds, or you just want to succeed as a retail using algorithmic trading, there's two things that you need: the algorithmic trading strategies that hedge funds actually use, and the professional grade tools. Those are the things. The problem is that every individual trader like you and me, we all lack these things, right? And if you go to like Rentech, they're not going to give it to you. The big guys are going to stop at nothing to protect their secrets. We are doing something different though. Unfortunately, I have a solution. This is 18 months of software development to give you the best algorithmic trading strategies and professional grade tools possible. So that way you can compete at an unfair game using the same exact system that we just showed you today that we're running our live hedge fund off of. Remember, it's one system, three pillars, the three softwares, and all of this is to stack the odds in your favor. Okay. Now, quick question. If I had a way for us to work together to transform you from a complete beginner or wherever you are at now in your trading progression to a pro algorithmic trader very fast, and so you can grow your investments with our exact hedge fund software, would you be interested in that? Just drop a yes or a no in chat. All right, seeing lots and lots of yeses. Good, 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 good. So you're in the right spot then, because I'm pleased today to introduce the Quant Science Pro Algorithmic Trading Software System with Python. Here's what's inside. So learning how to start and scale your trading alone is difficult. That's why our system starts with live coaching and mentorship with Jason and myself. Here's what's inside. This is how it works. This is how we break the system down. There's two different levels. There's the first level, which is great, especially to fill in gaps and to teach you the foundations and fundamentals. So level one starts with algorithmic trading foundations. This is what helps everybody build their knowledge so they know how the system works. Then we move on to level two, which is our professional grade tools. That's where you learn how to automate, deploy, and scale your algorithmic trading system using the same software that we use in our hedge fund. So we're going to focus first on level one. And let me break this down. We're going to start with the different clinics. So it starts with developing algorithmic trading strategies. That's where we all have to start. So for that, we have live clinic number one. This is our Quant Science Trading Strategy and Development Clinic. Inside of this, you get our 5-step framework for profitable trading. You learn our top 3 algorithmic trading strategies, including our first trade, which is volatility targeting with auto rebalancing. Trade number 2, a momentum factor with auto rebalancing. This is the exact one that we're using in our hedge fund. Trade 3, our algorithmic crack spread versus refiner. This is an intraday trading strategy where we use statistical arbitrage to develop a market neutral strategy that works in all markets. You also get Jason and myself live for an hour and a half. So inside of this is where you learn how we use this concept of 3 core trading strategies that Jason has found for us: volatility targeting, momentum factor, and we develop thousands of trading ideas from these 3 core strategies. This is how hedge funds actually trade They don't just willy-nilly come up with, trades. They have core strategies. Then what they do is they modify the key inputs, they modify and tweak parameters, and then they get an output and they continuously trade and do that. Next, what you learn is backtesting strategies. So for that, we have live clinic number 2, which is the Quant Scientist Backtesting and Trade Analysis Clinic. Inside of this, you get a detailed walkthrough of event-based backtesting. This is what we use in our momentum strategy inside of the hedge fund. Event-based is critical because this is going to be the most accurate, but it does take a lot more time to run it because it has to actually do like calculations every single day and look for events. This is for that, we're going to use back-tested portfolio strategies. We give you these as templates and we show you how to run them with this software called Zipline Reloaded. In addition, we also teach you how to avoid mistakes in backtesting, like overfitting and those sorts of things. And you get Jason and me live for an hour and a half. So inside of this clinic, you get a full workshop on how to correctly apply backtesting to multiple strategies. The goal is we don't want to make money by luck. All right. So this is the foundations where you see how hedge funds actually determine whether or not skill is making you money. And that requires statistical evidence. So Ted asked, do you do walk forward and walk back tests? We do walk forward analysis. That's what Zipline has integrated into it. And that is the best way to do it. You can still overfit, and I'm going to talk about that once we get into production. I'm going to show you how you can easily overfit, even with Zipline, even though it's a good backtesting software, and how we avoid that as well in production. Okay, managing risk. So that's the next part. And for that, we have live clinic number 3, the Quant Science Risk Management and Portfolio Protection Clinic. Inside of this, we give you a detailed walkthrough of key performance and risk metrics. We talk about how to analyze risk using Pifolio Reloaded, which KPIs. So these are key performance indicators, which ones matters, and also which ones we can ignore because we don't actually use those. And then when to iterate using our core key risk levels and how to go directly into paper trading once you have understood risk. Okay. You also get Jason and me live for an hour and a half. So risk management, it's all about knowing what strategy that you're using, what the back test has returned, and how to analyze it. And there's 3 different frameworks that you can analyze. And the most important thing that Jason and I have found is don't just trust a single metric like a Sharpe ratio or something like that. Like that doesn't tell the full story. So there's different things you need to do. You need to think about strategy and performance. You need to think about benchmark comparisons. You need to think about statistical analysis to tell you if you're getting lucky or if you actually have something that statistically is proven. There's also transactional analysis. Are you killing yourself with fees? Because for example, if you do an intraday strategy and you're trading in and out a lot of times, that's going to build up your costs. And a lot of traders will forget to accurately include that. And you want to analyze your transactional analysis. Same thing with factor analysis. This is something that almost no retail trader knows about. It's actually how hedge funds monitor their factors-based strategies. So factor strategies like momentum. If you don't know how to do this, you're going to have a tough time proving that your momentum strategy actually has alpha. And the key here is that, no single metric tells the whole story. You need to analyze through different lenses and different frameworks, and we show you how to do that in this clinic. Then is executing trades and also back testing. We're going to give you an advanced back testing clinic where we're going to introduce to you a new way to do back testing. So we give you a detailed walkthrough of how to execute and manage your trades. We give you a new trade strategy and a new back testing technique that gives you 1000x faster back testing. Spoiler alert, it's Jason's favorite back testing library, Vector BT. We teach you how to use that. And you get Jason and me live for an hour and a half. All right. Once you have the foundations done, now we're ready to talk about production. And this is where I'm going to start to share a little bit more behind the scenes of the hedge fund that Jason and I are operating so you guys can see what we're talking about when you move from kind of the foundational kind of idea of how algorithmic trading works to how we actually apply this in real life. Okay. So now it's time to get your hands on professional grade tools. And for that, we have level 2, our professional grade tools. The first thing that we're going to cover is our quant database setup. So we need to get you set up with data. We need to get you a lot of data that you can use for your back tests and to be able to process and basically understand the markets. So for that, we have live clinic number 5. This is build your own Python-powered quantamental trading system, okay? Inside of this, you're going to build that quantamental database that integrates both financial data APIs. We're going to teach you how to ingest price data and fundamental data for over 90,000 equities and ETFs. You're going to learn how to automate zipline bundling, blend a universe of stocks that includes equities and ETFs so you can backtest them, develop advanced universe selection and pre-processing pipelines to make sure the data is clean and you're not just using the raw data, and monitor, track, and manage over 500 cached files. And we're going to do that with single lines of code. We're going to streamline every single thing that you do. So let me switch over to this is my VS Code session, okay? And inside of our hedge fund, we have a lot of different data, but the most important thing is the QS Connect database. This is what you're going to learn how to set up. So if I open this, let me do open with DB code, and I will show you what this looks like. So this is our hedge fund right here. This one right here. So right now it looks like it's 3 gigabytes in size. If I go into any one of these, we've got our 27 million rows of historical prices. We can see that. Let's just do sort descending, no, sort ascending. So 2001-03. So we're currently in our hedge fund, we're collecting data as far back as 2000 for about 90,000 equities. You can see 88,000 rows. This is all of the assets that we track inside of our database. It's a lot, and it's not just in the US. It's literally every exchange that's out there. It's a lot of different things. So if you want to trade in different markets, you can feel comforted in the fact that we have information on all of those. In addition to that, so Jason had talked about one of the key components of Edge is having fundamental data. So we show you how to set that up as well. What am I talking about when I say fundamental data? That is the most important information, things like their gross profit margin. Is the company profitable? What's their EBITDA margin? What is their cash flow? Their payables turnover, some of the accounting metrics, asset turnover, current ratio, quick ratio, how many days do they look like they are solvent, solvency ratio, and those things we can integrate into all of our analysis and our strategies now, once we have data on that, to help try to improve it and to make sure that we're investing in high quality companies, okay? So that is the quantamental database right there. Let me close out of that and we'll get back to the training. So again, inside of this training, we're going to teach you how to set up your own quantamental database for 90,000 equities and ETFs, 19 million rows of historical price data, 30 years of fundamental data. That's income statement, cash flow statement, balance sheet statement, key ratios, quarterly performance, and annual performance. We also have simplified everything with our software. So we can handle 500 cache files of price and fundamental data, and it's literally a single line of code. Client, load cache files to database, boom, fresh equals true, boom, it's done. Perform automatic data integrity checks in one line of code. This line of code automatically checks the data, validates it, makes sure it's good. It also cleans up messy data with our battle-tested data pre-processing pipelines. I'll talk about those in a little bit later. And then also one of the big problems is how do we get the data prepared for backtesting? This is normally a pain in the butt. If you've ever worked with zipline, making zipline bundles is tough. We've made it super simple, one line of code. Got a question from Carissa, and forgive me if I'm not reading all of the questions, but this is a good one. Do you need to bring experience? You don't. This is the best part. You don't have to have prior experience. We're going to teach you from the ground up, and we're going to give you our ready-to-go templates. All I would do is I'd recommend maybe taking a little refresher on Python if you're curious, if you haven't started Python yet. But then if you dive into the program, we give you everything is templatized. We give you literally ready to go. We've made software to make it super simple. We give you templates so that way you can get started and they run right out of the box. So we made it super simple. Everything that you need in this clinic to build and manage your own high-performance quantamental trading database of over 90,000 equities and ETFs. Guys, Retail traders, they aren't handling this amount of data. This is an advantage. This is edge. So we're starting to give you more and more edge. How many hours of videos? These aren't videos. These are live clinics. We actually do live clinics, Vitor. So if you're interested in actually working with us and joining us on the journey, this is how we train you. We don't stand behind pre-recorded courses. We do have some pre-recorded content to get you up and running, but for the bulk of the curriculum, it's all live. All right, next is the quant research lab setup and backtesting. So next, what we need to do is we need to give you that education on how to set up your own research lab. So for that, we have live clinic number 6. This is edge discovery and validation using your quant research lab. Inside of this is where you discover how to develop and test hundreds and hundreds and hundreds of factor and ML experiments. You're going to learn how to combine data. So do data pre-processing pipelines, integrate algorithms, that actually help you pick the best stocks, and then figure out different portfolio construction strategies to help you blend and select the right stocks and make sure that you've got the right amounts and the right weights put on those stocks to optimize for whatever you're trying to do. You're going to learn how to implement price strategies. So this is factors-based momentum strategies using only price data. That's what we start out with. Then we up the ante. We show you how to integrate fundamental data with your price strategies and get a quality. This is what we call a hybrid momentum strategy, where we're integrating quality information into it. We also show you how to integrate long and short and volatility-based and position sizing. Do back test out of samples. So we talked a lot about walk forward testing today. We show you how to do lots and lots of strategy testing. I'm going to show you in a minute what we do in our hedge fund to actually prove to us that we have statistical evidence. And then you're going to uncover how to do statistical analysis yourself with our templates, alpha generation analysis, experiment tracking, performance comparison for literally hundreds of algorithmic trading strategies. Okay. So this is really important to understand. Jason didn't show you this yet, but this is how strategies in our system are developed. We use this thing called a configuration. And what this does is it ties in all the parameters and it runs our back test and it ties it into this software called ML Flow. So Jason showed you ML Flow. So every single night, what we're doing is we're running a nightly back test. So you can see 9 hours ago, I ran a back test. 1 day ago, 2 days ago. If you see a gap here, that's because the weekends happen and we don't run back tests typically on the weekends because we aren't getting any new fresh data. But that's where you see the gaps. We only do them on trading days or the night after a trading day. So this is how we track and store everything. We also are constantly doing these things called factor sweeps. So we realize that whatever strategy that we picked, if I click this load more button, we have tons and tons of these. Okay. I'm running every night. Every night I run 48 more back tests. So this was run last night 5 hours ago. This one was run 5 hours ago. This one was run 6 hours ago. This one was run 6 hours ago. This one was run 7 hours ago. Last night. Okay. So these are how we make sure that we've got the right parameters selected. We're constantly varying different parameters and we're trying to assess whether or not we've got the best optimal strategy deployed for the current market regime. Okay. So what do I mean when I'm saying this? So let's check out strategies. What I'm going to do is I'm going to add a where can I add I'm in the wrong. There we go. Here's the charts. Okay. So this is what I want to show you. So if we add a chart here, if I do an XY scatter plot of a comparison between, we'll do X-axis, will be drawdown. So we want to do portfolio max drawdown, and we want to do the Y-axis total return. Okay, so this will give us a measure. Basically, like if you combine these, it'll be that's benchmark. We need portfolio total return. There we go. Okay. All right. So we're going to add this chart. Let's add this right here. And then we need to add a bunch more of these strategies. So I'm just going to do strategies that we run here recently. So let's do this. See how I'm hiding or I'm exposing these to the chart. and you're seeing the chart start to kind of form some patterns, right? So let me just click a few more of these and we will expose some patterns. All right. So here's what happens. Statistically speaking, there's a trade-off between returns. So we want high returns, but also volatility. So portfolio max drawdown can be thought of as pain tolerance, right? And you can see that if I want a high return, I kind of have to give something up, right? So to get that higher return, I need to do something. So I can see now this strategy has a higher max drawdown. Maybe I'm not comfortable with that. So if I want to kind of still have a higher return but a lower drawdown, what I can do is I can pick one of these strategies. And this is how you figure out your comfort level. So I can tell already just by hovering over this strategy that it's long 28, and I can see that this particular strategy is a more diversified strategy versus this strategy right here is long 4. And I can see that this is going to be a super volatile strategy, but it's going to be like if you hit right on those 4, it's going to knock it out of the park, and that's what you're seeing. You can see this strategy long 6. So as we get down here in these higher returns range, we're doing less diversification. So this is how we kind of control and get statistical evidence of what strategies we want to employ. I also show you how to do this thing called factor sweeps, which is covered down here. Let me show you in iterative search. I want to go into my artifacts. So every night, what I do is I run a report. And let's do this. Show preview. Hopefully this works. Okay. This is a report of those sweeps that I just showed you. And what I'm looking for is statistical evidence that these are the right parameters to be using or what the best parameters are. So our live strategy isn't going to have these exact parameters. And what I want to know is, do we have statistical evidence to prove that strategies are benefiting from those parameters versus randomly selected strategies? And this is how I see, okay, our best strategies who have parameters like these parameters that are very important to our strategy, the best ones have those parameters. And then I can see here that our sweeps are constantly improving. That's a good thing. That means our sweeps are working. And I can also see what the relative importance is. Momentum top end seems to be super important. And these can change over time, but that's what we see. And then we can see over all of the sweeps. So every one of these dots is a back test. Every one of these dots got run overnight, and they take about 15 to 30 minutes each. So we're collecting lots and lots of information to prove that we have the best possible parameters selected for our given strategies, okay? And that's where we get the statistical evidence from, okay? So we have to run lots and lots of back tests. Don't just fall in love with one back test. It could be over-optimized and basically what we call overfit. And this is how we prevent overfitting in reality. This is how real hedge funds do it, okay? So that's what we teach you how to do. And that's what you're getting in this program versus every other program. The config file. So the config file is how we control a single back test. Every single one of these back tests that we ran, let me go back to MLflow, has a config file. So if I click on, say, let me drill into this one. This one will shock you. The chart will look really crazy. So it has input parameters for all the back tests, and it has the output metrics. These are the performance, the KPIs. We also have artifacts, so we can see very quickly for that strategy what the returns looks like. Okay, so this is super choppy, but it's killing. It's up 10x over the benchmark. However, with that said, you are getting pretty large drawdowns, 40% drawdown versus the benchmark, okay? And that may not feel good, right? But we keep track of everything. We have the strategy manifest. This is how the config file was created, which functions we use for preprocessors, which settings we use for every single part of that strategy, from the actual momentum factor that we built to the algorithm that we use to select and the portfolio composition strategies. You can see here we're going long 4 positions in this one with a long threshold of 1. Okay. So we track everything. It's also tracked in a pickle file, in a config pickle file. This is how we have 100% traceability from our back test that was run to the performance to how to make it repeatable and reproducible into the future through these config files. So you get to get your own quant research experiment tracking platform. We show you how to set it all up and how to run it. It's literally only a 90-minute sessions because we've templatized everything and we made it super simple for you. And you learn how to actually use the system and leverage it for yourself. You learn how to drill into experiment details. You learn how to check out the model metrics and the parameters. And you also learn how to do the statistical analysis yourself. So that way you can select the right strategy for your own comfort level, and you can still beat the market. This is an example of a 20-year back test. So I had a question earlier in the comments. I can't remember who asked it, but you wanted to know, okay, you're doing like a year or 2 back test. That's great. But what about a longer horizon? This is a longer horizon. And this is actually just the basic, the simple momentum strategy. We can even improve beyond this. And generally speaking, we can get over a 20-year period about a 10x return over the S&P 500 if the market, continues to have momentum outperform, which it's clearly in the most recent time has been doing very well. And this is the idea. You have all the statistical analysis. You now get to understand your confidence level. You can trust in the algorithms because you can see what the factor scores are, and you can realize, all right, even in a drawdown, I realize that this asset that I'm invested in is really powerful. It's just, kind of a coiled spring. It's waiting for the market to recognize that. And this is how you take the best strategies into production. And this is everything you need to confidently take your own algorithmic trading strategies into production. Next is machine learning. This is my area of expertise. So inside of that, I teach you how to integrate machine learning into our platform so you can develop predictive strategies. This solves that problem where I struggle with predicting future price movements. I don't know how to do machine learning. We show you how to do it. You uncover advanced feature engineering for machine learning strategies. We use technical factors. We use time-based factors. We use fundamental factors, and we integrate those into a machine learning model. You can make hundreds of predictive machine learning strategies, combine price and fundamental data inside of predictive ML strategies, backtest them the right way, avoid the cardinal sin, overfitting. When you start to use machine learning, I'll say this, let me say this. This is very important. Machine learning increases overfitting to random noise, and we have to be very careful, super careful with that. So we're going to show you how to avoid that cardinal sin. You're going to learn how to hyperparameter tune with machine learning strategies and how to perform statistical analysis to make sure that they're not overfit and they actually are generating alpha. Okay, so this is how it works. Inside, I share about almost 2 decades now of data science experience. So that way you can use my ML strategies to grow your investments. I have an 8-step machine learning for trading process. I teach you that inside of this clinic. You learn how to use our ready-to-go templatized machine learning functions. This one's set up for an XGBoost regressor. We have ones for all sorts of stuff like H2O. That's another popular machine learning platform. We have them ready to go. You can use our ready-to-go functions, and we give you templates that already include tons and tons of indicators that we know work well. We give you those as ready-to-go functions like add technical indicators, so 1 line of code, add time series features, 1 line of code, and you can implement these right in those config files. So you can even do it with fundamental features. We give you ready-to-go functions that work on fundamental data, so you can pull that data in from your quantamental database. We provide out-of-the-box support for all of the top platforms in machine learning, XGBoost, H2O AI, and scikit-learn. And we give you the templates. Everything you need to develop and track your own ML experiments, we give you that as well. Finally is Jason's area of expertise, and I've been diving deeper into this as well: deployment, automation, and orchestration. So we teach you how to do that. So we use this tool called Prefect. Every night, this is our actual hedge fund. I have 1, 2, 3, 4, 5, 6, 7, 8. I have 8 different prefix flows running every single night. Every night I update my data. That's this run. That's this flow here. If I look at the latest flow, it's exactly what Jason showed you. We're downloading price history. We're downloading fundamentals. We're converting those to zipline bundles, and we're automating the entire process. Okay. The same thing with other deployments. So every night I'm executing trades, and what we're going to do, we show you how. So this is actually a monthly strategy that we're running right now. This Omega paper rebalance. Jason runs the live trading. That's his kind of role. He manages the live execution. This is just to basically track our performance. So it mirrors his, and it's a paper trade. But every single night, we're going to test to make sure and see if it's time to trade. And if not, it skips that day. And we show you how to set all of that up as an automation. Okay. So inside of this clinic, this is where you learn the exact production execution pipeline from our hedge fund. You discover multi-strategy orchestration. So if you want to learn how to do multi-strategies, Jason's an expert in that. He's implemented and integrated everything for you. He's got strategy watcher to watch your strategies. That's in case something bad happens. You can kill a strategy, set up automatic P&L reporting, get real-time monitoring and alerts. You can learn how to orchestrate your workflows. So automated rebalancing, that's one of the things that you need to automate. Because swapping in out, you don't want to have that as a manual process. Trading in and out of 20 different securities, making 40 plus trades, and you want to get the best executions possible. We teach you how to do that. Implement order execution and fail-safe logic to make sure your orders get filled, because sometimes things will have a hiccup, and you need to be able to have the confidence that your trades are going to get executed. All right, we teach you how to do that. You get the exact trading strategy deployment from our hedge fund, the one that Jason runs and operates. You learn how to use Prefect, this tool that we've integrated into the system. And you can monitor tasks. You can scale it up with multiple workers. You can learn how to automate all the process of trading, executing trades, rebalancing your workflow with Prefect, and track your strategies to make sure they are running seamlessly. Okay. You also get the strategy watcher. So the Omega database is really important. Jason showed you that. But what this is it's a snapshot of every single trade that you make. You store that locally in a SQLite database that you can analyze, and you can also set up a strategy watcher. We show you how to do that. That monitors your trade strategies and can send you emails and alerts when something goes wrong. Okay. Discover multi-strategy orchestration. This is another big one. Like, can we scale up to multiple strategies and run multiple strategies in tandem, either testing in paper trading or live and track the performance of different strategies? Yes, 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 yes. We can do all of that. You can literally track as many strategies as you want. You can also run strategies in parallel. Omega supports up to, I think it's 28 connections. So if you're running them in parallel and running different strategies, I mean, we aren't running 28 strategies in parallel, but if you're a glutton for punishment and you want to do that, you can. Everything that you need to run your own algorithmic trading strategies on autopilot. All right, guys, that's the system, and I hope you like what you heard. Now, do you guys mind if I give you some free hedge fund tools? Let's talk about the software. Let's talk about how to get your hands on some extra bonuses that are going to help beginners, going to help you do this for real with us. All right, give me a thumbs up if that sounds cool. Do you guys like bonuses? You guys like free hedge fund tools? All right, let's do it. So first, we want to help complete beginners with the system. And I know it can be tough and a daunting task to get started. I mean, even watching this presentation, we showed you a lot of code today. And if you're still with us, and if you're a beginner, that can be a little confusing and that can be a little scary. But the key is if you're interested and you're willing to learn from us, then we want to help you. So to help complete beginners and to help everyone get started making their first trades, we're going to give you our bonus one, which is our Python for algorithmic trading software and live order execution fast track. This is literally going to shortcut 2.5 years of pain on my end Because when I was learning this, it took me 2.5 hours or 2.5 years before I placed my first trade. Because I was just so nervous. I was so scared, and I was going to screw something up, right? Uh, this streamlines that in about 3 hours. Okay. So it's very beginner friendly. We teach you how to set up the Quant Scientist Python stack to get all the software installed. You create an account with interactive brokers. We show you how to do that the right way. That's very confusing the first time I went through it. This has everything, all and I actually refer back to this fast track all the time, secretly, because when I set up like new paper trading accounts and those sorts of things, I can never remember how I did it. This is the key. I always come back to this. It shows you how to set up the trader workstation, connect Python to the trader workstation, and executing a paper trading strategy risk-free with Omega. We show you how to use Omega and get your first paper trading strategies that are risk-free in. Um, so inside of this, you're going to learn how to get the software stack installed. There's also more software that we're going to install, but these are some of the ones that are really important for quant and algorithmic trading. We show you how to connect your Python stack up to your trading account. So you're going to get this thing installed. This is called Trader Workstation. It's the same app that Jason was showing you when he like placed that trade for Palantir. We're going to show you how to get that set up, and you're actually going to place your first trades just using an algorithm inside of that fast track. We're going to give you an algorithm in there, and you're going to do it. It's going to be fun. Next, it's tough to build a high performance quant database from scratch. I know it took me 6 months to build ours, and I'm still working on it and improving it every single day and week. Um, so we're going to give you bonus number 2, our proprietary quant database software. This is the software that handles, it's called QS Connect, and it handles 90,000 equities and ETFs, 30 plus years of fundamental data, 90 million rows of price data, cache management file system, high speeds database, automatic zipline bundling, Yahoo Finance and FMP API integration, everything you need. This is literally a $10,000 software. We're going to give you lifetime access to it for free. Okay. We're going to add it in to the package. Next, it can be challenging to track and manage hundreds of algorithmic trading experiments. So we're going to give you our our QS research software. This is our proprietary quant research lab software. We're going to give it to you for free. This is our complete A to Z quant research lab workflow, statistical analysis of alpha returns, performance analysis, performance metrics. It's all analyzed for you. It's all stored and tracked in the MLflow database for you. It includes 10 plus built-in feature engineering tools. These are our ready to go tools, the Python functions that we built for you, the same ones we use in our hedge fund. You're going to get our zipline backtest automation suite, our MLflow experiment tracking and artifact bundling suite, includes and integrates the first class support for machine learning, including scikit-learn, XGBoost, and H2O. Everything you need to manage thousands of trading strategies like we do. $10,000 value. This is literally a $10,000 value. I'm not joking. This software is amazing, and we're going to give you lifetime access to it for free and as part of the package. Next, you can have the best strategy in the world, but you're going to lose money if it doesn't get executed properly. And that's why we call the toughest challenge of all the last mile, because you need to make sure that your exact orders get implemented, they get executed, they get filled. This is what's going to help you do that. So bonus number 4, we're going to give you our proprietary trade execution software. This includes, this is what we call Omega, and this has 1,000 software development hours that Jason went into building this. It streamlines trade execution, has, oh, I said 28. It's 32 API connections between Python and interactive brokers. It has SQL database trade logging, real-time profit and loss tracking. We can do automated rebalancing and target percentage orders. $10,000 value. This is literally, this is the key. This is how I was able to finally get over the hurdle of getting the confidence to execute trades. And you're going to get it for free. Lifetime access. It's what runs, our hedge fund runs off of this. It's so good. I call it a hedge fund in a box. I think Jason calls it like the order execution software development kit or something like that. But it is amazing. It literally does all of this stuff in here. The same stuff that people who invest in hedge funds pay them to do. It handles all of it. Finally, wouldn't it be nice to run everything automatically from any computer in the world? That is where we're going to give you bonus number 5, our proprietary automation software. It's called QS Automate, and it solves that problem of how do I run this on autopilot? How do I just set it up and it works? It handles that for you. You get the exact Dockerized hedge fund. So if you aren't familiar with Docker, it's a way to containerize software, and that way you can put it on any computer and you just set it up and it runs. Okay. You can run multi-strategy orchestration with it, automate P&L reporting and real-time trade monitoring. It's very beginner friendly. You can actually run it from your own computer locally, or we even show you how to set it up on a virtual private server so you can run it in the cloud. It's literally a $10,000 value. We're going to give you lifetime access to it. So this is everything you're going to get today, guys. The full clinic system. Clinic 1, top 3 trading strategies. Clinic 2, zipline backtesting foundations. Clinic 3, risk management and KPIs. Clinic 4, vectorized backtesting. These 4 clinics are the foundation series. Next is level 2. It comes with clinic number 5, our high performance trading database. Clinic 6, Edge Discovery Quant Research Lab. Clinic 7, Machine Learning for Trading 2.0. And Clinic 8, which is automated deployment and monitoring. This is level 2. This is the professional grade tools. We teach you how to get everything set up. And you're going to get the 5 bonuses. This is literally $40,000 in software for hedge fund. We're going to give it to you for free. Bonus 1 is our Quant Science Algorithmic Trading Setup Fast Track. Bonus 2 is our QS Connect proprietary database software. Bonus 3 is our QS Research Strategy Lab software. Bonus 4 is our Omega Trade Execution software. And bonus 5 is our QS Automation software that comes with a Dockerized container or a Dockerized image for you. What's it like being in the program? Here are some real results. So this is Leo. He says it's very much more a scientific way of looking at investing. You can have an algorithm pick the right stocks for a specific strategy out of thousands of possible stocks. You might look at Jason in Quant Finance as you look at Matt in data science. I'm really amazed about his knowledge and the way he can explain stuff. Even the guys like me that don't have a finance background. My last lessons in stocks and options were in 90s. I am now thinking on strategies and very much look forward to the added data science and very promising Omega app. In the first 13 days of paper trading, I'm guessing a screenshot of the results will be part of the presentation. Did I mention that Leo was up 11.5% in his first 13 days of trading? This is insane. Jonathan was up $7,600, 7.6% in his first 14 days of trading. Doc was up 5.6% returns in 7 days. Brew was up 3.68%. Ethan was up 15% in 10 days. This came from David Stevens, one of our students. I had no background in finance. My cumulative returns are 25%. My financial planner did not come close to that. So the key is versus your benchmark. Whatever that benchmark is, we're going to beat it because we're implementing algorithms that know how to find the best positions, and we go through the exact process that we're actually using in our hedge fund. Won't this take a long time? Macau was up $5,300 in a day. Ricardo was up $2,300 in 2 days. Masa was up $2,800 in 4 days. Don't need a large account size to make this work. GCL NYC in our Discord channel, he was up $1,300 in initial 10K in under a week. Jim was up $534 on initial 10K. And it's about trading together and getting the support that you need. We are huge on support. That's why you guys all get access, lifetime access to our Discord channel. It's a private Discord. And once you become a student, you'll get access to it. Doc in our Discord channel, he says the depth of technical knowledge is exactly what I was looking for. Adam Stelmach says, this gives me the confidence that I'm able to do better. This is what happens when students work together. So this is Ethan. He says, I was curious about a new component of this trading strategy, a 42 multiplier. Jonathan then back tested his 42 multiplier and he's like, wow, this works way better. These are students in our live trading community that are winning because you're working together. What can live algorithmic trading do for you? These are students that have went live with us. This is Data Moves Me, tons of green. I've tried many times and I know I sound over the top. I am loving this. This is Ethan's live account. He has over $500,000 in these trading strategies. Ethan's live account is up 75% versus the S&P 500 at 13%, and that was just from 2025 through the end of the year. Our students are winning in live trading. They're crushing it. This is Leo. He's up over 6% in one day in his live account, and this is real money that he has put behind our strategies. No finance background required. None of these guys had finance experience. We even cover everything to get started for complete beginners. For Python, we help you guys out. If you've never learned Python or never tried Python before, we help complete beginners succeed in this program. Now, if you decide to go with another program, there's other options out there, and we recognize that. So Jason and I did an extensive review. This is the top line certification program for quant finance and algorithmic trading. It's run by Fitch Learning. The CQF Institute is what it's called. And what they do is they have two levels, 6 modules. Building blocks of quant finance, quant risk and return, equities and currencies, data science and machine learning 1, data science, machine learning 2, fixed income and credit. Like all of this is just a mismatch of finance stuff and data science stuff, but what is it? It reads more like a curriculum than it does a path to actually doing this stuff for real. Proof. What they're doing is they're tacking on exams and final projects, just like a college would do, right? That is not the way to do this. The real test is, can you make money in the market? And that's what we teach. That's why we do trading competitions instead of exams. There are no exams or projects. What we do is between every single clinic in the program, we do live trading. So that way you guys actually get reps. They don't even give you proprietary software to give you an edge for generating alpha. We do. And by the way, we didn't talk price. Their price of their program, $23,000 to get their level 1 and level 2 program. But guess what, guys? You don't have to pay 23 grand. Our special launch price is only $4,999. Now listen, I had a choice when designing this with Jason. We could let hundreds of people in and give nobody any support, or we could cap it to 25 people. So we could actually answer questions and give you the live support that you need. We went with the latter option. Now, I have to say something. We already have 20 spots filled. So there's only 5 spots remaining for the next live cohort, okay? That's cohort 13. There's now only 5 spots remaining for that cohort. So we're only letting in, we have to cap it at 25 people. And if you want to get in, there's only 5 spots remaining. Otherwise, the alternative is to wait for the next cohort, which will be in another 4 months after that one. Now, do you mind if I give you one more bonus? Who here likes bonuses? Give me a thumbs up if you like bonuses. All right. I want to reward the fast action takers. So if you enroll before Sunday, we're going to help you out. After Sunday, we're really going to be charging $4,999 for anyone who wants into our level 1 and level 2 program. But if you buy before Sunday at 5 p.m. Eastern, I will give you a $1,000 discount. Okay. That means that you can get in today for only $3,999. That's $1,000 off. Keep in mind, that's 83% less than the cost of their program here. And they don't actually give you any proprietary software. So if you're going to be one of the people who grabs the last 5 spots, put a 1 in chat so I know who Jason and I am going to be coaching later. Put a 1 in chat, guys. If you're going to be joining the program and you're excited about taking the journey with us to build your own hedge fund, to grow your investments, to unlock the trading strategies that hedge funds use, the big guys are keeping you out, and you want those strategies, that's what we're going to offer you. And we're going to take you on the journey with us. We're going to stand behind our product. Jason and I are going to teach you live, and we're going to do everything in our power to help you. So if you're going to be one of those folks, put a 1 in chat right now. All right, guys, I'm going to give a countdown for everyone to get a fair shot at getting in. Remember, there's only 5 spots left. Are you guys ready? All right, 3, 2, 1. I'm putting the link in the chat right now, and I will walk you through the checkout form. Okay, so this is the checkout form. I just dropped the link in the chat. You guys can click on it there. and I'll just do a brief walkthrough so you guys see how it works. So again, the special launch offer ends at 5 p.m. Eastern. After that, it's really going to be $4,999. Use this coupon code before Sunday at 5 p.m. and this will get you $1,000 off. I'm going to put the coupon code in the chat. All right. Next, everything that you guys are getting today. So this is the exact system that I just talked about. I'll recap. Level 1, you're getting. This is the live clinic number 1, top 3 trading strategies. Live clinic number 2, the backtesting foundations. Live clinic number 3, risk management and KPIs. Live clinic number 4, execution and advanced backtesting. And with level 1 comes our first 2 bonuses, the fast track course for beginners and everyone to help get them set up properly and placing their first trades. Also, bonus number 2, you're going to need the Omega algorithmic trading software and order execution for the fast track. So we're going to give you that for free, $10,000 value. You're also going to get level 2, which is the next 4 clinics. That's high performance trading database, Edge Discovery Quant Research Lab, Machine Learning for Trading 2.0, automated deployment and monitoring. And then you're going to get the next 3 bonuses. So bonus number 3 is proprietary QS database software, $10,000 value. Proprietary QS research strategy lab software, $10,000 value. And the proprietary QS automation strategy software, $10,000 value. Normally $4,999. Today, you're getting $1,000 off, okay? This is the order form. Just put your full name in. That's your first and last. Email address. Then also the shipping address. We aren't actually going to send you anything. What this address is needed for is for down here. If you decide to go with a buy now, pay later option, they require these. And this is how you can get payment plans if you want a payment plan. It uses this thing called Klarna. It's only available in certain locales, but you can spread out the payments up to 24 payments. So select which one you want. We recommend level 1 and level 2. The coupon code does not work for level 1 only. There is no discount on level 1 only if you decide to go that route. Now, I need to mention there's one other checkbox here. If you would like lifetime access to all cohorts, and if you want the ability to jump into the current cohort or jump into any future cohorts and not count towards the head count. Remember, there is a strict 25-person limit. We only let 25 new people in. But if you become a plus member, plus membership allows you to not count towards the head cap, and you can join all future cohorts. So as we update our software, as things change, we got a lot of questions in the chat about like, how do we keep up the software? How do we maintain everything? We maintain it all on GitHub. And yes, we give you access to it, but if you don't stay up to date with how it all works, then that's going to be a risk to your quant trading hedge fund. We realize that, and we want you guys to be able to stay up to date and jump into the new cohorts and new clinics so you can see all the new stuff and to make sure everything is running properly for you. If you want that, it's normally $1,500, but we will give you $500 off with this program. You just click on the checkbox here. You're going to see that the coupon code disappears and it jumps to $5,999. How we rectify that, we go up here, we do the old copy, we do the old paste, and we click apply. And like magic, it drops down by $1,000 and you save that $1,000, okay? So it's like you're getting this for free. QS Plus membership, highly recommend it. About 90% of our students opt into it, and it really reduces your risk into the future and allows you to jump between cohorts and never count towards the head count, okay? Different payment methods, credit card, obviously you can do credit card. That's probably the most popular. Klarna is probably the second most popular if that's available for you. This is how you can get payment plans much better than what we can offer at Quant Science. Okay, and that's how you enroll. You just click complete the order. In about 60 seconds, you let the server process, and it'll send you the welcome email packet. It will tell you exactly what your next steps are. It will add you to the kickoff call for the next cohort, and you will hit the ground running. You'll get immediate access to all of the resources. So you're going to get immediate access to the fast track course, so you can get started with that right away. It'll tell you how to get access to the software. and get you all set up. All right, guys. With that said, what questions do you guys have? I'm happy to go through any questions right now and walk you through any additional questions about how the program works. Oh, we just got our first. There's only 3 spots left, guys. So, Corey, are you here on the call? Can you say hello? Corey Sopinski. It's Corey Sopinski. Hey, Corey. So Corey just joined the program. All right. Corey, I don't know what I said to help get you to pull that trigger, but you pulled it fast. Awesome decision. And I'm super excited to have you. Jason and I are pumped. We're going to help you over the next 90 days, get you up and running and become a pro algorithmic trader with our system, all the tools that we've been developing over 3 years. I'm super pumped to have you. Corey, thanks for joining. So guys, what we do when we get people joining the program, we give them claps. All right. So please, if you wouldn't mind, give Corey a clap. He pulled the trigger and he joined the program. You can use your emoji. There's a clapping emoji there. All right. Next one is Simon. Simon, are you on the call here? Simon, say hello. So Simon just joined the program. Say hello if you're still on. Simon Tang. Ah, Simon T, there you are. Hey, Simon. All right, do me a favor. We clap. Let's clap for Simon. So, Simon, you just joined the program. You and Corey, you guys are now joined at the hip because you two are in the next cohort for the QS Pro Algorithmic Trading System. I'm super pumped to have you, Simon, and I'm excited. I'm going to do everything in my power to help you succeed in this game. I'm going to give you all of the information that I know that we've been using, and I'm just really pumped to have you in the program. So great decision, Simon. All right. I'm happy to answer questions. I know one of the biggest benefits of attending these workshops is to be able to ask questions. All right. So I'm happy to answer any questions that you guys have and go through what questions that we have in the webinar chat. Okay, so we're going to kind of work through some of these. Let me show you the cohort. So we gotten some questions about what does the cohort and clinics look like and what if I cannot attend? So this is Jerome asked, can the live clinics be watched back in case one cannot attend? Yes. So we record everything. Jason and I put the recordings up typically as almost as soon as the session is airs. So these are the dates for cohort 13. We're going to have our kickoff call on March 2nd. If that does not work for you, then what happens is we can get you into cohort 12, but you have to be a plus member. Cohort 12 started December 2nd, and we can get you in. You just shoot me an email. If you're a plus member, I can add you. Otherwise, if you're not a plus member, the only option is to attend cohort 13, and that's what you get assigned to. If you are not one of the next 5 folks, once we hit that 25 limit, then we are going to move people to cohort 14, which will start likely in June. So you're looking at waiting until June. These are how the clinics clinics are structured. So we have a kickoff for each level. So you're going to see a kickoff here and a kickoff here. The first kickoff is for level 1. We will meet on March 2nd at 10 a.m. Eastern. That is a Monday. Anything that is not a Friday gets highlighted. So you're going to see there's these 2 dates. The kickoffs we always run on Mondays. Then training sessions are typically on Fridays at 10 a.m. Eastern. Okay. The first clinic will be Friday, March 6th. And then immediately on Monday, we're going to have you guys working on the trading competition. This is a friendly competition. You're not competing against anybody else in the cohort. Don't worry. I don't want to pressure you guys. All it is we're going to give you the tools to succeed. And what we're going to do is we're going to use the Discord channel to help you guys through trading. All right. So when we're not in session, we have our live Discord channel. Here's what that looks like. So let me pull up Discord. So this is our Discord channel. And in here, we have tons and tons of students that are all working in here, all on the same path. So you can see here in our Post the Wins channel, we're all working together. Leo, he's made it out of one of his drawdowns. That's awesome. This is Ethan. He's killing it so far year to date. He's up, I want to say 8% as of the 6th. You can see everybody's in here. We're all talking. We're talking strategy. We're getting questions answered in real time. We're getting software help. So this is the system that's going to help you actually implement this stuff. Like this is a very applied system. It's designed to help you actually get results. It's not just to teach you a bunch of quant stuff. Okay. Um, all right. So the next thing, we do clinics Fridays, 10 a.m. This is the full schedule. I'll put the link in chat if you guys want to check it out. So let me throw that link in chat. You guys can click on it. Each clinic runs about 90 minutes. So we've streamlined it so that we have about 60 to 70 minutes of content. And the way we're able to streamline that is through our templates. So Jason and I have templatized everything. Jason has templatized all of the level 1 stuff, all of the level 2 stuff I have templatized. So we give you the templates that are ready to go, and you can run it with your quant research lab. We test them before every single training, and we make sure everything is running so that way you get an awesome experience. Each session lasts about 90 minutes. That also includes Q&A. So we give you time for Q&A, and that's one of the biggest things that I think is valuable. When you're attending a live session, you get the community aspect. That's number one. And number two is getting your question answered either in real time, live, or in the Discord channel. The Discord channel is the when we're out of session. If you have any problems as you're applying what you learned in trading competition, we help you through that. Okay. So we always start trading competitions on the following Monday. And then Friday, we give you some more tools and techniques, and then you apply them on Monday. All right. So we're constantly building you up as you go through this system. We also have a bonus machine learning clinic that I'm going to throw in here. This is unannounced. We're giving this to you for free as part of level 1. Then we get to level 2, same structure. We have a short break between level 1 and level 2, help get everybody caught up. And then we kick off level 2, and we go through the same type of sequence, meeting at 10 a.m.s on typically Fridays, and giving you a 90-minute training. And then what we do is we help you through the following week, get everything set up. Okay. And that's how it works, guys. So that's really the whole system in a nutshell. What other questions do you guys have? So we just got Brandon just joined. So Brandon Maxwell, are you on the call? Say hi, Brandon, if you're on the call. Introduce yourself to everybody, Brandon. Say hello. Hey, Brandon. All right. Everybody, let's clap for Brandon. Brandon just joined the program. So Brandon, awesome decision. I'm super pumped for you. I'm excited. I honestly, this is the best system that like nobody is doing this. Nobody is teaching people how to set up their own, literally their own solo trader algorithmic hedge fund. If you're trying to do what I do, which is grow your family's investments, this is an awesome program. We're going to teach you how to wire it all up and get it running. And most importantly, trade with algorithms and not gut instinct. I'm excited for you, Brandon. Awesome. Great decision. You said you built your own, but this helps me prevent reinventing the wheel. Yeah, building your own is a massive, massive undertaking. We have been in the same boat for 3 years, and trust me, the advantage of joining this system too, you're now a creator, whether you realize it or not. So all of our software, you're going to get access to the GitHub repos. That's where we house the code, and you're going to be able to also ask for features. And if you're a builder, I'm a builder, Jason's a builder. It's awesome for people like us because you're going to be able to actually have an impact on the software, and we're all going to win together. That's how this system works. We all trade together, we win together, we find issues, we find things that we want enhanced and feature requests. All you got to do is say the word, and if we like it and everybody agrees, we're going to implement it. All right. Oh, we got another one. So Kevin, are you here? Kevin Higgins, say hi to everybody. Kevin, we're going to we want to give everybody a clap. Yes. Oh, Dublin Capital. Kevin Higgins from Dublin Capital. All right. Awesome choice, Kevin. I'm super excited to have you in. It sounds like you're already maybe an investor, maybe running your own family fund or family office. This is the perfect complement to that. This is going to put you far and above all the other family offices that you're competing against. This is serious. Trust me, while they're working on Excel, you're going to be in Python, you're going to be building, you're going to be crushing it. So I'm super excited to have you, Kevin. Great decision. And we're going to kick off 2026 the right way. All right. So what other questions do we have? Yeah, I'm excited for you, Kevin. The recording. I will send a recording out that assumes that Zoom actually records. Sometimes there's hiccups and stuff. I will make all attempts to make a recording available tomorrow. So that's Vishal asked about a recording. Can you get the sign up link? The sign up link is right here. Okay. All right. I just put the sign up link in the chat. We do have one spot left. We have one spot left. Okay. Make sure you use this to save $1,000. Okay. That's the coupon code. And yeah, just check that link out. Okay, so while we're getting folks signed up, let's talk real quick through any of the questions that we've got in here. So Chris asks if it's only equities and ETFs, or can we integrate historical data from Coinbase? So we actually have just integrated crypto, and so let me pull up QS Connect. So QS Connect is the software, one of the softwares that I manage, and we track all of the releases over here in the releases tab. So you can see we just released QS Connect 2.0.1. That was a bug fix released, and then 2.0. So we have now, let me search crypto. So we want to search crypto. Okay, so we just added crypto, Forex, and commodities into our QS Connect database. And then also on the execution end, so if we go to Omega, Omega handles, let me type in crypto. So Omega handles stocks, options, futures, continuous futures, Forex, indices, CFDs, commodities, bonds, futures and options, mutual funds, warrants, bags, and cryptocurrencies. Okay. So we do have all of the tradable contracts in Omega. Anything that Interactive Brokers supports, we support through Omega. That way you can execute them through Python. Okay. All right. Sandeep says, I know Python is slow compared to C++. Is that normally still used by hedge funds? So Python is gets this bad rap for being quote unquote slow, but like for example, Polars is actually written in this software language called Rust, and Rust is like it's even faster than C++ in many cases. And what Python does through Polars is allows us to get that Rust speed through Python. Same thing with vector BT. Vector BT used NumPy, vectorized calculations. Those are all under the hood wrappers for C++. So all of the fast compiled languages, Python actually gets the speed up running as a wrapper through those software programming languages. You still interface in Python, which is the beauty part, because Python's easy to write, runs in real time, and runs interactively versus having to compile it. But all the key functionality that's slow typically has already been ported over to a faster language like Rust or C++. So that means all of your rolling calculations, all of those things, they get processed very, very fast. Okay. All right. Let's see. I have an Interactive Brokers account. Just hearing about TWS gives me a headache. So what I actually use is this thing called Gateway, IB Gateway. And when we run our fund, Gateway is how we actually use. So you don't actually have to use TWS. TWS is kind of like we'll call it like a GUI for your trading account. And I get it. If you know, that's a fair point. If TWS to me is a little clunky, it looks outdated. But the Interactive Brokers Gateway is killer. So if you haven't tried Gateway out, highly recommend it. In our fund, when we run when we're running, we're using Interactive Brokers Gateway. So this, it doesn't kick you out, once a day or whatever. Interactive Brokers Gateway just kind of keeps running in the background. We have it running in a Docker image. So you can see that here in this, I believe it's this image, for our hedge fund execution. We have Gateway running. Oh, wait, no, here's the Gateway image. This is the Gateway. Yep. So Jason, for the live execution, he runs the containerized application through QS Automate. Okay, what questions do we have in here? All right, all right, all right. So what execution services do you use for crypto? So for crypto, it's still going to be everything's through Interactive Brokers. There's a reason that we use Interactive Brokers, and that's because number one, 99% of hedge funds, we did our research, 99% of hedge funds actually use Interactive Brokers to place their orders. They have what's called smart routing, which checks all the exchanges. It checks like half a dozen or more different exchanges, finds the lowest price, and implements it there. This is different than from like Charles Schwab and some of these other brokerages that are out there. So we really love Interactive Brokers. It lowers our costs. It actually reduces our trading fees, which not only saves us money, but it gives us better priced executions, which makes our strategies more profitable. Do we support intraday and daily trading? Yeah. So intraday trading, we actually have a strategy. I didn't talk about it a whole lot here because it's not performing quite as well as the momentum strategy. Momentum strategy is what we're running live in our hedge fund. The intraday strategy that we're running, that is what's called a spread strategy, which is a form of statistical arbitrage. Okay. So what we do is we stream live data and we pull data that comes in from Interactive Brokers. So we get live market data and we pull that data every 15 seconds. We check to see if the spread has moved to the point where beyond it we have a threshold, and it makes it profitable for us to place a trade. And when it swings the other way, we sell out of the spread. So that's how we do it. It's a form of what's called statistical arbitrage. It is a market neutral strategy. It works in all markets, but in this current market, momentum is crushing it. So that'll make you maybe, we'll say, 20% per year or something to that effect, maybe 30% a year, depending on how much you're trading and what the volume is. But with momentum, we're beating that. So that's why we're shifting mainly into momentum. But yes, we do teach you how to do intraday strategies as well. Suri asks, is there a way that we can join the first session and feel if it's not right for you? So unfortunately, we can't let you do that because we have to give you all the software, all the proprietary software. That is really the gold. And when we give you access to that, we can't undo that because you can save that on your computer, and then it's IP theft, basically. So if you back out of the program and take your money back, we don't get anything and you guys get everything. So we unfortunately cannot let you into the first session and let you test it out. So unfortunately, no. Do students get access to the GitHub repos? Yeah, so Simon, when you join the program, you're going to get access to all 4 of those libraries. So you'll be given instructions, and in the welcome email, it'll tell you how to get access to them. We do have to do a review process, double check, make sure that you've joined the program, and which you'll be fine for, and then we give you access. So it takes about 2 days. It's like a 2-day process. Okay. Could you put the link in the code? Yes, we'll put the link in one more time here for folks. Let's do this. Where is my link? Oh, here it is. Here's the link. Here, Jan, there's the link. And then here is the coupon code. Okay. All right. Dennis asks, how long is the program and what is the time commitment? So our time commitment is only 90 minutes a week for the actual training sessions, and those are on Fridays. So let me go back to the cohort schedule. So each one of these training sessions, this is run weekly. They're only 90 minutes. We actually get through them pretty quick because we want to get you the resources. We want to get you. We've templatized everything to speed things up, and then that way, the following week when you run them, uh, you'll run them, and then we can help you out with if you're running into any snags. So it's really time commitment, 90 minutes a week. And then if when the trading competition starts, you'll want to run through the software on your own time. That might take maybe 15, 30 minutes, get things set up on your end. Or if you run into a snag, we can help you through that. Okay. So that was Dennis. Okay, Jan, I'll send you the recording. The recording typically goes out tomorrow. We'll send it out around 11 o'clock. Okay. All right. Are there any final questions? Are there any final questions? Okay, I'm going to wrap up the webinar. So we definitely want to help you guys get in. Cohort 13, keep in mind cohort 13 starts on Monday, March 2nd. If you become a plus member and you want into cohort 12, which is currently going on right now, just shoot me an email if you're a plus member and I'll add you to it. Okay. All right, guys, we're going to wrap it up here. I really appreciate it. Remember, if you want in on cohort 13, spots are closing fast, and Jason and I are super pumped for those who joined to really help you. We want to kick off 2026 strong. We want to help you guys set up your own solo trader hedge fund with Python, become a pro algorithmic trader, and really we all learn together. We all win together. Super excited to have you if you join the program in the community. And I'm super excited to see you in our live events and get you access to our proprietary software. All right, guys, we're going to wrap it up here. I will see you all soon. Thanks so much for attending live today and investing in your future. And for those who joined, I'm excited to help you further over the next 90 days. I'll see you guys soon. Take care. Bye-bye.
Record.